if people can go, all right, this is volatile, stock market's volatile, crypto's volatile, housing markets can even be volatile. I'm not going to panic in a down moment. I'm going to set myself up where I'm not investing more than I can afford to lose. I'm not doing this on debt. You have to keep your income going. So whatever it is, whether it's a job or whatever, you have to be very thoughtful about that. But setting yourself up well, knowing that there's going to be a downturn, that it's about time in the market instead of timing the market.
Right.
And then you can just ride this out.
Exactly. And I think for the majority of people, the vast majority of people, that is the best advice that you can give them. Don't invest with debt. Don't invest more that you can lose. And I'm going to take it one step further, because I think for 90% of people out there, regular retail traders, investors, you don't need to be buying individual companies. Just put your money into a low-cost ETF, into a low-cost index fund, and that's it.
Facts. What are those, though?
And so,
Jaspreet, most people don't know what that means.
so let's break that down. So an ETF is an exchange-traded fund, and it is literally a group of companies, a basket of stocks. So instead of you going out and investing in, let's just say, McDonald's, the corporation, and now all your eggs are in McDonald's, meaning all of your money is in the investment in McDonald's. So if McDonald's goes up, you can make a lot of money. If McDonald's goes down, now you're going to be panicking because your whole portfolio is down. Well, the issue is you have the most upside, but also the most risk. Because if the executives at McDonald's run their company into the ground and they go bankrupt, your whole investment's gone. Now, if you invest into something like an ETF or an index fund, which are very similar to each other, now you have a group of companies where now it might be McDonald's and 499 other companies. So now what happens? You lower your risk, you lower some of your upside, but you also lower some of your downside. Because now if you run through that same scenario where the McDonald's executives run the corporation into the ground and they go bankrupt, well, you got 499 other companies in the portfolio, so you're okay. And so then what can happen in a low-cost ETF or an index fund is they have computers, and this is automated, where they will kick out McDonald's because now they're no longer fits within this 500 companies, and then they'll put in another company to take the place of McDonald's. So now it's passive on your end, because if you're not willing to put in the work to do that active investing, to do that sort of fundamental analysis, meaning listen to the earnings calls, study the revenue, study the profits, study what the corporation is doing. If you don't care about doing that, if you don't want to do that, and if you're not willing to do that, don't invest in individual companies, because now you're taking on all the risk, hoping for some upside. Versus you can mitigate a lot of that risk by just investing in ETFs or index funds, and you can do this right off of really any stock brokerage app out there, and now you can buy them. Now, how do you buy them? Well, two strategies, passively or actively. Passively, which is a great strategy, is now ideally every week or anytime you get paid, you put a little bit of money automatically into this ETF or index fund.
What system do you use for that?
So I use a platform called M1 Finance. There's
M1 Finance?
M1 Finance. There's tons of brokerages out there. You can find whatever one you want. Where now it is completely passive. Money is automatically pulled out of my checking account on Wednesdays. You pick the day, it doesn't matter. And it's automatically invested
known as dollar cost averaging.
Dollar cost averaging into my portfolio of ETFs. So I have a number of different ETFs in there. Happens every week, whether the market's up, whether the market's down, and I don't touch it. It just does its thing. The active side would be now you're looking for a good price point. And this is where it gets a little bit more advanced, where if you're willing to do the research, you can pick ETFs or index funds where if you see a big crash, you see prices go down, you can put more money in. Or now you can start looking for good companies that you believe are undervalued. But again, this now gets a little bit more advanced where you have to be willing to put that work in.
Can I ask you a really blunt and interesting question?
Yeah.
The average person, they're not financially literate. Would you rather, if they had $1,000, would you rather they play blackjack or try to actively trade that money?
Play blackjack or actively trade that money? Don't trade. I think trading, unless you want to do it to learn, I traded. I'll give you my personal experience.
I know you would trade because you know what you're doing.
Well, I wouldn't trade. I would invest.
Even you wouldn't trade. Would
I don't trade.
Your only options, blackjack, active trading.
So explain that to me, because
person.
I'm not a casino person. So blackjack is the one where you go to 21.
Oh, you're going to lose either way.
Oh, you're going to lose either way.
The reason I bring this up is I really think that the average person would be better off taking their $1,000 to Vegas and playing blackjack because it will be fun. If you try to actively trade, you're going to lose your money. Now, Is that 100% of the time? No, of course not. But Ray Dalio, for people that don't know, runs the largest hedge fund in the world. Right. When he explains this, I'm like, oh my God, I'm never going to try to active trade. He said, you're going up against people like me. I spend whatever, $200 million a year on research.
Yeah.
And I have AI, which is making trades in milliseconds.
Right.
We know how fast the fiber optic cable is to make sure that our trades go through slightly faster than the other person, which can be the difference between, a percentage point, which could be millions of dollars. He was like, you're going to lose. And he was like, it's hard for us. And we've got 1,500 employees, like I said, AI that they've been building for the last 25 years, fiber optic cable, measuring things in milliseconds. He's like, the odds of you finding something that we haven't already traded on is basically zero.
Yeah.
Every person that I know, this is a very small sample size, I'm well aware of that. Every person that I know has lost money on a long enough timeline actively trading.
Yeah.
The only people that make money are people and I will use my language. This is how I think about myself. I am too stupid to beat the market. I'm too stupid to beat Ray Dalio. That's for sure. And Ray Dalio's entire team and AI and all that. So actively trading is off the table just because I know it would be like me trying to play professional soccer.
Right.
I'm going to get my ass handed to me by Messi. The difference between me as a footballer and Messi is the same as me as an active trader and Ray Dalio, right? The gap is so catastrophically large that at least playing blackjack, I would have a good time.
I think the difference is now differentiating active trading versus active investing.
Yes, 100%.
Because trading, I tried trading one summer in college, and I spent every day staring at charts, candles, which are these little ways that you can make a stock chart, and you get glued to the screen, you get glued to the emotion, and it is very difficult.
Yeah,
and
watching candles is emotionally addictive.
And so I stopped it because I realized I was never going to make any real money doing this. Active investing, what I mean by that now is you're looking at companies, and when you see this company fall because the whole world is getting scared, the whole market is tanking, well, now this is an opportunity for you to come in, buy a great company at a discounted price, and then you just hold on to it.
Now, would you do that at the company level or at the ETF index
now,
level?
Again, who is the person? For me, I would do it at the company level. For the average person, do it at the ETF level. Because again, you have to be willing to put in the work to research companies, keep up with the earnings statements if you want to buy and hold for the long term.
Are you doing active trading right now?
Not right now. But
active investing.
Active investing. I am not actively investing my money into the market. I'm passively investing. The reason why, for one, active investing means I'm putting my money into the market when I see a great buying point. Second thing is, it's now going into just my personal life. What is the best use for my money? Right? Invest my money in 5 places. My own business. I put my money into real estate, into stocks, into crypto, into physical gold. In this order. Right now, I see the most opportunity in my own business, market briefs. And so instead of actively putting my money into the market.
Sign up now. Your favorite thing you read every morning.
It's a great newsletter, right? So it's where we break down what's happening in the financial markets into a fun, really easy to read email. But for me, I see the opportunity there. It is the biggest purpose for me.
Bet on yourself.
And the most excitement for me.
Yep.
So instead of me putting my money into the market, instead of me putting my money into real estate, which I love doing, I've been stopping these active investments and putting my money back into market briefs. That way we can build the company, build the infrastructure, build it into something bigger. And so that's
now,
where
obviously I knew
going.
the punchline, which is why I asked the question. But I want people to understand that you make a living researching this stuff, knowing about it, and even you aren't doing the active investing. You're doing passive, for sure, very wise, set that up. But for the average person, the odds that they will do better by trying to go in and saying, oh, I know where this is going well enough to know that now's a good time to buy McDonald's, whatever. They're going to have heard headlines about Tesla and things like that. And I'm not saying that there aren't moments that present themselves, but like if you watch Wall Street Bets, do you watch Wall Street Bets on Reddit at all? It's scary. You get these kids committing suicide because they don't understand, like, they'll do something where, I forget if it's calls or puts or whatever. I am so not good at this. I want people to be, I know my limits. But whatever it is, where there's an unlimited downside, And so they end up owing like $75,000 all of a sudden. And they're like, what do I do? And so now they're just absolutely devastated.
Yeah.
So anyway.
So let's put trading out the
yeah,
window.
people have to be so careful. Oh my
Don't
God.
be trading, don't trade your money. And now when you're investing in money, don't invest with debt. Don't
Yeah,
invest
so
more than you're
I
willing
want
to
to
lose.
go back to recession.
Yeah.
I think this is a huge moment of opportunity. Even though I'm warning people as vociferously as I can about trying to beat Ray Dalio, I do think that understanding that if you're playing your cards right and you're not overextended and you've done what you're talking about, you've got your 5 buckets of investment, we're going to get into, remember to hang till the end because I'm going to give you the 8 things that Jaspreet teaches a lot. But if they're doing it well, this is Black Friday for assets. And if people think of it that way, like don't get yourself in trouble, don't be overextended, don't have debt. But if you think of this as Black Friday, there's huge opportunities. And this really is a moment where I want people to pay attention and take advantage of this moment. I am so hungry for the average person to get educated on this stuff.
Yeah.
Because I have lived the American dream. And I mean, not the like it's your house and all that, but that you can change classes. I grew up lower middle class and now I'm wealthy. And so I'm like, no. This is a set of ideas. If you get your head around the right ideas, like you can really win.
Yeah.
But you have to simplify. And because of the internet, because of meme culture, people get so caught up in the emotion.
Right.
It's the one thing you can't do.
Right.
And you have to be like stone cold logical.
You have to get that emotion out. And it's hard because everywhere you look on the internet, YouTube included, there's a lot of emotion. Now, I'm gonna be completely blunt, completely honest here, because I'm gonna talk about how the YouTube algorithm works, because I think we've talked about this before. I see this on my own platform where sometimes YouTube is going to promote certain video titles over the other. So let's talk about the market going down. If I say one YouTube title is the market goes down 3%, here's what you need to know. Be prepared for market crash. What's gonna get more clicks?
Be prepared for market
Be prepared
crash.
for market crash. Now, I hate that because I hate these titles. Now you're gonna say, Jaspreet, but you and every major YouTuber has titles that sound like this.
Oh, someone got to this video through a clickbait title.
Someone got through this, right? and so now let's dissect this, because I have a team, and for a very long time they kept saying, Jaspreet, make these types of titles, and I refused. And what happened? Views went down like this. Now, I had a heart-to-heart with a couple people on my team where they were like, Jaspreet, listen, your videos are, I'm saying what they said, I don't want to sound like a super narcissist, but they were like, your videos have real financial education that people need to hear, and it's better than what a lot of people are putting out. And I was like, okay. They're like, if this title is what it takes to get people to learn what you're saying within the video, why not make it? And so it was one of those things where I was like, oh my God, I hate this, but it's the only way to provide that financial education, to get people to click it. Because if I can get you to click that video and now I can provide you real education without saying, oh my God, I need to panic and sell. No, understand the opportunities, be calm, look for the options. That's my goal. So it's one of those things where I see it because I'm in it. And I'm gonna talk about market briefs for another second, because that's another driving reason for me wanting to create market briefs, because the internet is full of sensationalism, especially in the titles, because they need to get you to click. That's how just the internet works. It's the reality, okay? I mean, it is what it is. I have fought it for a long time. I hate it, but it's the reality. Now, the reason why I like market briefs and the reason why I'm so passionate about it is because we can completely separate ourselves from that, because now we are one email. We are, you know when it's coming into your inbox every day. It doesn't matter what the title is because it's in the email. Once you open the email, everything is right there. And so now we can give you the actual news without any of that, that hypiness. And so that's the way, you and I operate. But there's a lot of people now that take it one step further, that even the news then, the actual content of the news becomes just super crazy sensationalist that doesn't make any sense. That's sometimes an outright lie, which then takes it one step further, where now you have to be able to dissect the crap, dissect the good. Because the reality is, if it doesn't have a quote-unquote clickbaity title, you're never going to see it. It's never even going to cross your phone, your screen. It will be hidden into the depths of the internet. So now if you see it and it has a clickbaity title, the question is what's inside that content, and that's where you have to be able to dissect and dig a little bit deeper, understand if this is good and if this is not. And the general rule of thumb is that generally when times are good, they're typically not as good as the media makes it seem, and when times are bad, it's typically not as bad as the media makes it seem. It's usually somewhere in the middle, and this is where now you have to really be able to understand and do that financial education for yourself now as an investor. But the best thing is, just keep investing your money, looking for those opportunities, but then also be able to understand what's happening, which is taking some of your emotions out of the equation. And so this is now kind of, building that financial education where it's difficult to do, but it's so important, especially in this day, this age, where the internet is our means of education, where accessibility is so much more, where anybody can invest and put their money into the markets. Anybody has access to these tools. Like, one thing that I want to mention is when we talk about building wealth, whether we're in a recession or not a recession, the majority of people, I think, assume that it's a lack of tool set that's stopping them from getting to where they want to go, when in reality, for the majority of people, it's a lack of mindset. Most of us have access to the tool set. It's just our mindset that's lacking. You don't need a ton of money.
What's the mindset problem?
The mindset is, one, believing I don't have enough money. I don't have access to enough tools. I don't have access to enough things to go and do it. That if I want to go and build a business, I need this, and this. I need $10,000. I need $100,000 to go out and do that. I need to have this type of degree. I need to have this type of parent. I need to have access to these types of people in order to go out and build a successful business. If I want to go out and invest my money, I need $10,000 before I can invest for it to be worthwhile. Why would I want to start investing with $10? What is that going to do? When in reality, these small investments do build up. If you are 21 years old today, and you start by investing just $100 a month, which is just over $3 a day, and you do this consistently until you retire, until you're 65 years old, 66 years old, and you can get an average 10% return on your money. That doesn't mean it's a 10% return every single year. It's an average 10% return over the course of investment, which is the average stock market return. You will retire a millionaire on that $100 investment, assuming you never increase the amount of money you're investing. And we're talking about less than $4 a day.
Whoa. That's $100 a month, not a one-time $100.
$100 a month.
Yeah.
Less than $4 a day. You put $100 a month for the rest of your
40
life.
years.
And so even if you get a raise and you never put another penny into your investments, you will be able to retire a millionaire on the $4 a day that you're putting aside.
Yeah, see, that's why I want people to get stoked on that. Like, look, there is an entrepreneurial side, and we can talk about that later. That's exciting and high risk, and pour yourself into it. You will get kicked in the face over and over and over. But if you care about the thing that you're doing and you have a strong enough why, even losing can be incredibly fulfilling. But that's a separate bucket. When it comes to investing and thinking about retirement, it is a totally different ballgame.
Right.
It really does boil down to buy low and sell high. Now, how do you get to that point? You can do what you just talked about, which is you put a little bit of money in, doing dollar cost averaging, and you may be dollar cost averaging simply because you don't have the capital saved up to do it any other way.
Right.
By the way, capital is just a fancy word for money. So you don't have the money saved up to do it any other way. So you're just, every paycheck, it's pulling out, you say you do it on Wednesdays, whatever. Just at some increment, it's pulling some amount of money, which can be very small, to your point, $100 a month. But doing it consistently and not selling in moments where everybody else is freaking out. And then, like, as advanced as you need to get is, if we're in a downturn and you're doing your ETF or your index, and you know that we're in the middle of a difficult time, maybe instead of $100 that month, it's $150 or $200, right?
Yeah.
You're not going crazy, you're still just dollar cost averaging, but now you know that when it's Black Friday for assets, that you're gonna spend a little bit more just because you know it's gonna go farther.
Exactly.
But it isn't sexy, man. And this is why, like, having now witnessed euphoria, I'm like, people act a fool. And I had the impulse to act a fool. I was like, no, go more. You're so smart. Like, you get this. This isn't. And I was like, I know better than that.
Yeah.
I am a fool. The only thing I can hope for is that by staying rational and calm and not overextending, that I can stay in this long enough to sort of wash out my ignorance,
Exactly.
just through time.
Exactly. I think it was Wall Street Journal that used to do this thing back in the day where they used to bet against a monkey, where a monkey would throw darts at a stock.
I love this already.
And they would compare what the monkey picked against traders.
This
hedge fund
really
traders.
happened?
This really happened. Look it up on Google. And so the monkey obviously had no financial education. It just literally threw darts at these companies. It would hold on to it. I think it was a 10-year span, or it was a long-term thing. Compared it against these massive traders. Guess who won? Not the traders, the monkey.
Oh my God.
And it just shows
Can we
the
turn
value.
that into a t-shirt? That feels like a t-shirt. This is so hilarious.
It's
But
reality.
it's really important for people to understand. A monkey outperformed professional traders.
Professional traders.
I'm gonna have to look this up.
Look
This
it up.
is way too important.
This is the reality where it's just the value of owning an investment for the long term. And it, like you said, that short richness is loud. It's flashy. Everyone talks about, oh my God, I doubled my money in this meme stock. Oh my God, I made so much money here. It's loud and it's flashy, but that's also fleeting. It's the
It's
first to
also
come,
how
the
you
fast to go.
lose money. Where it's like, yeah, you gained all that money, but then you lost it all.
Exactly. But the real wealth, real, true, sustainable wealth is built in silence. It's quiet because it just keeps happening in slow increments over time. And now you start to build this, there's that snowball analogy where I'm from Michigan, right? We have snow there. You start by building a small snowball like this, you put it on the ground and you start rolling it. In the beginning, you got to roll it a lot because you have this much surface area to pick up as much snow as you can. As it gets bigger, it grows faster because now you have all this surface area that can pick up more snow. So you roll it and it picks up more snow and gets faster and bigger and faster and bigger and faster and bigger. And before you know it, now you can have a massive pile of snow. But the initial one is the hardest because you're starting with $100. And you're like, what's $100 going to do? But if you stay consistent with the $100, and if you make more money, you keep putting more money in, and you just stay consistent, letting the $100 grow, then you put in another $100. Now the first $100 is growing, and then you add in another $100, and then you add in another $100. Now the first $100 has grown, hopefully. The second $100 has grown, hopefully. Now you add in another $100 to grow, and you just keep doing that, month after month after month after month. Now you're really starting to build a snowball that's growing and growing, and if you look at this not month after month, but year over year, that's when you really start to see the returns. But the problem is, who wants to wait that long? Nobody wants to wait 10 years, 20 years, 30 years, because we're thinking about, when can I buy my Lamborghini tomorrow? How can I buy my Lamborghini next year? How can I have the nice stuff now? And this then becomes a different question. We're turning to these long-term investment vehicles to make us rich next month, as opposed to actually doing what it's supposed to do, which is make us rich over the long term. We're trying to do it the wrong way. So now we got to flip the question. If these types of investments are there to make us rich for the long term, how can we make more money today? And so this is where people turn to things like trading. Oh, I can flip these stocks, I can flip these houses, I can do whatever to try to make a lot of money right now. And for some, it might work in the short term, but it is very difficult over the long term. And this goes back to what you were saying regarding something like entrepreneurship. This is more of an income issue because now we're trying to create an income through trading. Now, if you are a full-time trader, you have the systems, you have the tools, this is all you do, maybe it works for you. But for the vast majority of regular people, it is not going to work. And this is where now something like, just like entrepreneurship, it's not going to work for the majority of people. Majority of people are not meant to be entrepreneurs, but you have to start asking the question of, how can you increase your income if you want to have that better lifestyle? But now, I want to caution that a little bit more too, because we talked in our previous interview about building systems, how to become financially smart. This is where now one of the simplest, not easiest, but simplest ways to become wealthier faster is when you increase your income to not increase your expenses. And so the best way for me to give an example of this is if you ask the majority of people, what's caused your financial issues? The majority of people are going to say it's an income problem. If I just made an extra $10,000, I'd be able to put money aside for my investments. I'll be able to do this. I'll be able to do that. I'll be able to do so many other things. But what data has showed us is for the vast majority of these people is when you make that extra money, what happens? Your expenses go up right with your income. Now you got to buy a new car that matches your new income. You got to go on a vacation. You got to celebrate. You got to live this lifestyle that matches your income. So instead of doing that, create a system that flows no matter how much money you're making. And one of the simplest things that you can do is follow something like a 75, 15, 10 plan, which means that for every dollar that you earn from now on, 75 cents is the maximum you can spend. 15 cents is the minimum that you're investing, putting aside for investments. 10 cents is the minimum that you're putting aside for your savings. So now whether you're making 40 grand a year or $4 million a year, it doesn't matter. You're still following the same system where it's just a percentage based off how much money you're earning. And the only thing that you're going to change is your savings, because you don't want to save your money forever. You want to save your money for 3 reasons. Save your money for an emergency, save your money for a big purchase, like you want to buy a home or a car, or save your money for an investment. If you're not saving your money for one of these 3 reasons, don't be saving your money. Now, when we talk about saving your money for an emergency...
That's a bold statement.
Yeah.
That's a bold statement.
There's no other reason to save your money, because now you're just saving your money.
We're going to have to get into inflation, otherwise people are going to derail. But I also, let's start there. So why not save? That's all I was taught as a kid. Save, save, save.
Me too. So I grew up in a traditional Indian house where the whole idea of plan and becoming wealth, this is for me, was become a doctor. Why? Because doctors have a big status and doctors have a big salary. Now, when you make this big salary, what is the plan to become wealthy? Not by investing, not by doing some fancy stuff. It's by saving your money. Have a big bank account. So live small, live off of ideally 20 to 30% of your income, save the other 70%. And that might sound extreme, but this is the reality of what a healthy financial household looks like for an Indian doctor.
Was it for emergencies? Like what is the
Just
purpose
save
of
it.
saving? In that particular mindset.
So it's not for emergencies. It's literally just to build up a big savings account.
To
It's
pass on to
become
your
wealthy.
kids?
To pass on, to build wealth. So
But to be wealthy and live in a shoebox, like what is there, like are they ever articulating why you're doing it? Like if my mom, if I'd pressed her, what would she have said? You never know when you're going to need it. That's the only way to get rich. She would have said something like that. But if I had then pushed farther and said, okay, what's the point of being rich? Well, then you can do this, that, and the other. Well, not if I'm saving forever. I can't.
So I think it has to do with the times that somebody grew up in. So this save heavy culture is a big byproduct of my parents' culture. People who grew up, were born in the 60s, especially in India. So now if you look at that time frame, where you look at before 1970 in India, it was a very tough time where poverty was very common. Most people were poor.
See, that I get. That's a protection against,
And it was
I don't
protection.
ever want to be hungry. I
And
don't
that
want my
culture-
kids to
and
be
s-
hungry.
But that mindset hasn't gone away. And so it just kind of trickles down, right? You see what you know. Because I personally, many of my friends are doctors. Many of my friends make a lot of money. Many of these people also have 0 investments and have huge bank accounts, because then you're beaten away from this idea of doing something risky like investing your money. Investing your money is dangerous. It's bad. Like when I wanted to invest in real estate, nobody in my family had ever heard of this concept of real estate investing. Either had I. Nobody I knew was an investor. So I told my dad, Dad, I want to invest in real estate. I found this condo for $8,000. I want to rent it out, blah, 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 blah. My dad's response was, you are stupid. Go become a doctor. Go do something worthwhile. And, he said it out of love. I love my dad.
Interesting.
But
What, did he really say worthwhile?
Yeah. Now, the reason why my dad was that extreme about it is, Indian parents have this thing where they like to create stories to scare someone away from doing
Don't
something.
we all?
And so, his whole thing was, what happens if your tenant doesn't pay you? What happens if you go to your tenant's door and then they shoot you because they don't want to pay you?
That escalated quickly.
This was the example that he gave me. And so it's just you start creating all these fears where it's like, if you invest in real estate, you might die. And that's supposed to scare you from not doing it. It's one of those things where it's this lack of financial education, lack of ever experiencing it, because you don't know that it's possible. You don't know anybody doing it. You don't know anybody that looks like you doing it. You're still new in this country. How are you supposed to go and do it? It's just very scary, where this is the safe thing is just saving money. If you save 100 grand, today, and you look at your bank account a year from now, it's still going to be 100 grand, maybe a couple extra pennies if your bank is giving you some interest, but that's it. If you invest
So
100
why
grand,
isn't that the best idea ever? My wife Lisa struggled profoundly with her gut health and experienced debilitating stomach pain. So I focused my energy on learning everything I could about the human gut. Viome is on the cutting edge of this growing area of study with their at-home gut intelligence test. Just 2 to 3 weeks after sending in your sample, you can see your results on 20 integrative health tests that measure your inflammatory activity, metabolic fitness, and the health of your gut lining. As a special offer to my viewers, Viome is offering $110 off your test. Just go to tryviome.com/impact and use code IMPACT to get the $110 off.
well, going back to what you said, inflation. Inflation, by definition, is diluting the buying power of your dollar. So
I thought this was a fundamental law of nature. It's really human intervention.
It really is. Inflation comes from the word inflate. What are you inflating when you have inflation? And it's funny, if you've been watching some of your content or my content, you know that you're inflating the monetary supply. When you increase the amount of dollars out there without increasing the amount of wealth, the value of each individual dollar goes down.
You just broke brains. How do you increase money without increasing wealth?
So if I just print money, the Federal Reserve Bank, which is the central banking system of the United States, they have the ability to print money. They can increase the amount of physical dollars out there or increase the amount of currency through digital things. So the amount of money in circulation, they can increase this. And so if we go to a very basic example, if we live on a hypothetical world where there's me, you, and 3 other people, and each one of us 5, have $20 each, and that's it. We're each equally owners of 20% of this world's wealth. But what happens now if this new alien government comes in and then they magically gave us $20 more each? Are you going to be double as wealthy as you were before? You might feel like you are for a minute because you see, oh my God, I have $40. There's only $100 in this world. I have 40 now. And then you go and talk to your friends and you go shopping and then you realize, oh, everybody has $40. So now all of a sudden the price of anything you want to buy is going to be double because you've increased the amount of currency in this case without increasing the actual wealth. And so this is where you kind of have to differentiate currency from money, because you have to kind of define what money is, because money can have a couple different definitions. It can be a store of value or it can be a means of exchange. And what I mean by that is money as a store of value. If you look at physical gold, for example, gold is your traditional store of value because it takes time, effort, and labor to mine physical gold. So that time, effort, and labor is represented through a physical gold bar, and that is the value, the physical gold. Now, if we compare that to something like our paper dollars, it's very easy to transact with. It's a very good means of exchange. Gold is difficult to transact with. If I wanted to go to McDonald's and buy something with some gold, it's going to be very hard to do that, versus with dollars, it's very easy to exchange. However, it can be easily manipulated because the Federal Reserve Bank can print money essentially on command. So they can increase the amount of dollars out there, which decreases the value of each individual dollar. So while our dollars serve as a very good means of exchange, it's not a very good store of value. This is where now what wealthy people do is they want real money. They want something that's not only going to store their value, but also hopefully increase in value. This is what assets do. If you look we hope, right? You invest in assets for the purpose of making money. How does it make money? By increasing the amount of value that it provides. When you invest in a company or an ETF or anything, you want to invest in something that you believe will be more valuable in the future. If you didn't believe that, you wouldn't put your money in there. How is it going to become more valuable? How is McDonald's or Amazon going to become more valuable? Their goal is to produce more value, to create something new that will provide more value to more customers, and then that value is represented through revenue, through profits, through money. So you're investing in something that you believe will produce more value. Same with real estate. You want to invest in an area that you believe will be a more desirable area. Because if you invest in an area where businesses are moving to, where people are moving to, where jobs are moving to, You own that land, you own that property, you own that building that is now more valuable because more people want to be here. And now that is represented through money, through this currency, where now more people want to be there. So now rents are higher, property values are higher.
This is why this stuff gets complicated and why people turn their brains off. Because, for instance, if you pick the wrong neighborhood, you can lose your ass.
Right.
And this is where ETFs, index funds become very interesting. To use real estate as an example, I personally, because I recognize how ignorant I am, I would much rather be investing in a whole bunch of neighborhoods across not only this country, other countries, because I don't know which one's going to pop off.
Yeah.
Right? So because there is so much uncertainty, it's like as you spread that out now, but to your point, you're limiting your upside, but you're limiting your downside.
Right.
That to me is far wiser. You don't become the next Ray Dalio by doing that. So
Sure.
You're not going to turn into a billionaire. But when you think, like when Ray Dalio was pressed, like what would you do? Like if you could only leave a set of instructions
Right.
to your kids about what to do with their money. You couldn't actively manage it for them. You couldn't have your company do it. You just had to give them instructions. And he came up with what he called the all-weather fund.
Yes.
And so it's just like, I don't know what's going to happen. So here's like the diversification
Right.
that you should put it across, and you're not going to make as much money, but you're not going to lose a bunch of money either.
Exactly.
And so all of this stuff is so freakishly complicated that, even better, it is so easy to be wrong and so hard to be right that your odds of getting it right consistently enough, because it's to your point about the monkey, if you looked at it in 6 months, the monkey probably loses. You look at it in 12 months, monkey probably loses. 18 months probably loses. 2 years maybe loses. 3 years though, it starts to be like, all bets are off. And by the time you get to 10 years, it's like the monkey's winning.
Yeah.
Just because you just left it alone.
Yeah.
Instead of thinking that you could outsmart the scenario.
And Warren Buffett did a very similar bet against some major hedge funds on Wall Street. And what he bet, it was a $1 million bet that the winner would give $1 million and then they would go to charity. And his bet was that the average person would be better off by investing their money into a low-cost index fund as opposed to actively managing their money, actively trading their money like the hedge funds were doing over the long term, over a 10-year period. And what happened was exactly what you said. In the beginning, the hedge funds were crushing the index fund. The index fund was down, hedge funds were going up because they were able to find these trades and make all this money in the short term. And the media was asking Warren Buffett, how do you feel about it? He said, the 10 years are not up yet.
Yeah.
And then come year 10, well, then we had some swings on the market, some hedge funds had some losses, you took out their fees, which is also a big chunk of it. After factoring in the fees and all that other stuff, the index fund won. And what did he do? He just put his money into it, sat back and didn't do anything, versus the hedge funds are spending all their time managing the money, trying to beat the markets. And they did for a little bit, but then over the long term, they didn't. And then when you factor in their fees for spending all that time trying to beat the market, now your returns are less than if you just put your money into the market and didn't have to do a thing.
Yeah.
And so this is that basic financial education where it's not as attractive. People want to be able to show off. Like, it's just like people would rather look rich than actually be rich. And you would say, oh, no, I would rather be rich. Well, people's actions speak louder than the words. Because if that's true, you should not have a Gucci belt if you don't have that same amount of money in the market. You should not own a BMW if you do not own any investment portfolio, right? I mean, it's just a matter of looking at what you do. Does it match with what you actually want? If you want to become wealthy, answer is yes. Okay, what are you willing to sacrifice? You have a BMW in the driveway, you got the Gucci belt, you have the Louis Vuitton. If you have this nice stuff, but you don't have the nice assets, your priorities are in the wrong place. And this is just a matter of you looking at yourself in the mirror and being honest with yourself and understanding what do you want. And for a lot of people, maybe this is a matter of financial education, maybe this is a matter of preference, but many people would rather look rich than be rich. If you just look at, what it is. Now, if you dive a little bit deeper, the people that want to actually be rich, we want to be rich today. We want to be rich tomorrow, not be rich in 5-10 years. And so what does that do? It then drives your actions. So it's very difficult now to understand that, hey, I'm willing to sacrifice not only the nice stuff today, but then also not do the attractive, the sexy, the things that are hot, that are making people so much money today, because I believe in this long-term investment that has been time-tested, because it's so boring. But the reality is that boring is where the real wealth is built.
Dude,
And-
facts. I always tell people, boredom kills more entrepreneurs, kills more dreams than
Yeah.
fear or failure. It's the daily grind. Like when, to your point about watching candles, when crypto was really popping off, I had to stop myself from watching it because it was so fun and so exciting. And I was like, you can't spend time there because I'm not going to want to watch it when it's down.
Yeah.
So it's like you want a system, you want to set it, you want to forget it.
Yeah.
And if I could get people to understand the psychology of how money impacts you, like, oh my God, to your point about people would rather look rich than actually be rich. When you think about what money really does for you, you have to understand peak emotion. There's only so much emotional amplitude that you can have. In fact, do you have an image in your mind of the highest emotional amplitude moment of your life?
As it were, I felt the most emotion.
The highest positive emotion you've ever felt.
Positive emotion.
Yeah,
That's a tough one.
positive for sure.
You know, it's funny. My wife used to get really upset at me because I never showed emotion, and she was like, "What's wrong with you? Like you never get excited. You never sad." I'm like, "Look, the only real emotion that I feel is hunger. I get hungry." I've changed since
That's
then.
what a woman wants to hear, by the way. If you said hungry for you, baby, that's the only thing I ever feel, you might have a shot.
Yeah, so
I just get hungry,
I've
yeah.
evolved since then. Where I'm working on that. But I think the happiest is really for me being around my family and the people closest to me and just laughing.
Yes.
That is my favorite thing in the world. Like
Yes.
what do I want? I literally want my friends and my family in one room and us just joking around because we make fun of each other. And it's not in a mean way. It's just our personalities and we laugh and have fun. That is, if I could think of my favorite thing to do, it would be that. Maybe if you want to take it one step further, maybe do it on a beach. But it's honestly, it doesn't matter where we are. If we're in my basement eating some whatever pizza, some Indian food, and just laughing.
Do you think the game of money is too complex for the average person to ever win? This is what I think is happening to the middle class. It's just too complicated. And unless I'll expand on that. The reason that we've created rich and poor is because of the fact that the way that we're getting money into the economy is by buying assets. To buy assets, you really have to understand an obscenely complicated game. And most people don't understand that game. And so they just say, I'm just going to go work and I'm going to earn a paycheck. And I know how to live paycheck to paycheck. It's not ideal, but like I get by and I have fun and I'm able to raise my kids and all is well. Well, even most people aren't. Not most people, but fewer and fewer people are having kids now. And so we're simplifying the game. We're collecting a paycheck. We're entertaining ourselves for reasonable amounts of money. Amazon's helping make like your average stuff cheap. So people don't really have like a big incentive, especially in an era where the rates were just declining and so debt basically was pretty easy to get a hold of. Goods are getting cheaper and cheaper. So I don't have to Tony Robbins money master the game. I just play the game of going and getting a paycheck and now all is well. But the way money finds its way into the system in an era where we have to like inflate is only going to people that hold assets.
I don't think that is too complex, but I think the first issue is comfort is one of the biggest drugs in the society. And many people are comfortable.
I'm going to back you up before we get to comfort. I think it's so complex, you sound crazy. So that means I think you're carving out a small piece of the money world and saying, just focus on this piece. What's this piece then?
Look, money at its core is very simple, just like how fitness at its core is relatively simple. In the fitness world, it's eat less, work out more to live a healthy lifestyle. In the financial world, spend less than what you make, invest the difference.
In what?
And this is where it can be as simple as you put your money into the S&P 500. Now I'll explain what that means because it's going to sound very complicated if you've never been exposed to the money. S&P 500, literally all that means is the 500 biggest companies in the stock market. Historically, the S&P 500 has grown by 7 to 10% a year on average over almost the last century, which means if you took $100 a month And that's all you did. You didn't look for the next Google, the next Amazon. You didn't try to find real estate investments. You didn't try to do anything complex. All you did, you had a system and you just put your money into that fund, a fund that gives you exposure to the S&P 500, and you did nothing else. And you even automated it so you don't have to do it manually because there's brokerages out there that do that for you. If it was just completely automated and you never looked at an individual stock, you never touched your investment portfolio, and all you did was spend less than what you make and you just invested $100 a month, you would have retired a millionaire with $100 a month investment. So now, what do? We like to complicate it. We like to say, man, this stock looks hot. Get into this stock before it pops off. Should we short this stock? Should I do options? Should I go and do this? Or should I do that? Should I, and we start trying to play this game, because now we start to get into the whole idea of this is fun. This is attractive. How can I make more money?
Gambling at that point.
And for a lot of people, it becomes gambling. And this is where now understanding investing versus everything else. Investing, look, spend less than what you make, okay? If you're making $25,000 a year, $250,000 a year, or $2.5 million a year, it doesn't matter. Spend less than what you make. And, it doesn't matter how much money you make. It starts with a mindset thing. There's a reason why you've seen so many athletes make millions and end up bankrupt. I think it's like almost 8 out of 10 NFL players end up broke or bankrupt within 5 years of them leaving the NFL. Okay, it's not just a money thing. We talked about 6 out of 10 millennials making over 100 grand a year are broke. And there's a crazy high number. I'm going to say around 50%. I don't remember the exact number, but of people making over 250 grand a year that are also paycheck to paycheck. It starts here. Spend less than what you make. Live smaller apartment, smaller car for a little while. Have some extra cash. Now, what do you do with that? You can save some and you invest some. Where can this money be invested? I gave the example of the S&P 500. How do you put your money into it? Well, in the stock market, you can look at something like SPY. SPY is a ticker symbol that gives you exposure to the S&P 500. Another one is VOO. I personally am invested in VOO. That gives you exposure to the S&P 500. So if you just put your money in there, historically, you would have seen 7 to 10% growth a year. If you say, you know what, I don't even know what the S&P 500 is, can't I just put my money into the stock market? VTI is an ETF, meaning it's a fund, that gives you exposure to the entire stock market. It's a total US stock market fund. So now if you just put your money there, now you don't have to, you're not investing in Amazon or Google, you're investing in all the stocks. Amazon, Google,
you are technically investing in Amazon
you are,
and Google,
but I'm saying not the individual company.
Everything.
And so now it's we can dumb it down to as simple as, just put a little bit of money into these things and now you're just going to meet the market. You don't got to worry about all the fancy stuff. All the fancy stuff is what generates all the clicks and the excitement and the fun and the noise and that's what gets all the headlines.
It's also where people lose their money. So yeah, getting to someone like Ray Dalio and a huge hedge fund, those guys are going to time the market. Those guys are going to use AI and hundreds of millions of dollars in research and all of that to stay ahead of the curve. Ray was the one that said to me, he's like, man, the problem is that they don't understand how sophisticated we are. And you've got your average person on the street that thinks that they're going to beat us to the punch. And he was like, we measure our trades in milliseconds. We've got AI. They've got 1,800 employees or whatever. And he's like, yeah, the odds of you beating us are effectively zero. So that puts people back into the passive investing mode, which is what you're talking about. Okay, I will say that even that, like you're so immersed in it that you forget how complex even that is. Like, the ticker symbols. People are like, what's a ticker?
Yeah.
So
and so like, I'm going to go back to the conversation I had with the guy from Detroit recently, where we had the same talk. He was like, I have no idea how to invest in a stock. Where do I start? And so now, you're right. That can be daunting because now you open up one of these apps and they're going to ask you for your bank information. They're going to ask you for your social security information, which can be like overwhelming. You can be distrustful. Like, who are these people?
Can I just say something really fast?
Yeah.
In high school, I was taught calculus, but not about the stock market. That's crazy.
You and me both. I didn't know what the word dividend meant. I didn't know what passive income was. I didn't know what wealth meant. I had no idea what these things were until I started reading books. And we all live in a bubble, each one of us. Every single person lives in a bubble, and until you get yourself out of that bubble, you don't realize how big the world is and how many different things there are. Like, when I broke this bubble and started learning about money, I mean, I've become obsessed with things. Like I started just like I couldn't stop learning, and it blew my mind how much I didn't know. And then I started learning about fitness and nutrition. I'm like, oh my God, so much stuff I didn't know. Then I started learning about spirituality. What? This is all the stuff that I had never learned about before. There's a world of things out there, and when you think you know something, I can pretty sure, like, guarantee you that you don't know it. Like the more you learn, the more you realize you don't know. And so, like, when we talk about, okay, how do you now make your first stock market investment? There are apps out there that will even do that for you. Like they will just ask you how aggressive do you want to be with your investments. A little bit, medium, a lot, and then it connects to their bank account, and then it just invests it for you. But I think the psychology, like the education part can be learned with a few YouTube videos. Like if you devote yourself for, let's say, 3 hours, you can figure that out. Just search it on YouTube, Google, there's a bunch of content there. The difficult part, which is not so easy to learn, is the psychology part. Because now, if you're getting started in the money game and you start investing your money, and then you see markets go down, and now you see a portfolio in the red, that's where now most people will panic, freak out, and sell because you're like, I was supposed to get rich because of this. I put in $3,000, now it's down to $1,800. What the heck happened? And this is where that psychology is so important, and that you cannot learn as easily. And it's
What
not
should the
attractive.
psychology be? So here, the great irony of investing is the best advice anyone is ever going to get is buy low and sell high. The thing that people are least able to do is buy low and sell high. The reason is when the price is low, everybody else thinks it's terrible, it's trash. And so now you have to believe in yourself and your analysis of the data enough to go, okay, it's the right play to do it now, even though the price being low means everyone thinks it's trash. And so you've got to buy it when everyone else thinks it's trash.
Yeah.
And then as the price goes up, then you have to think it's not going to go up forever. And so I'm actually going to take some wins. I watched this happen with crypto. It was surreal. I had never paid attention to the markets before, so I didn't understand what euphoria looked like. And so everyone was just like, it's going to go up forever. Nothing bad could ever happen. And they were buying in at the high. And then as soon as the price started dropping, and look, Michael Saylor may end up looking the fool. But what he tried to tell everybody was any increment of time less than 4 years in Bitcoin is just noise. Don't do it. And people still sold like fucking crazy. And so, yeah, getting people to buy low and sell high is already the most difficult thing. So if that's the wrong psychological approach, what's the right approach? How do you build the resilience?
So on the first kind of basic level, it's when things are going around, if you're investing in the funds like I talked about, if you look at history, we have seen recessions and market crashes happen almost every decade, which means you see boom, 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 ups and downs and ups and downs and ups and downs. And the people that make the money are not the people that sell at the bottom.
Is there a long arc? So if we're going up and down, is the market just, realize as it's going up, don't buy, because you know it's going to crash 7 years later. Buy when it crashes, ride it up, sell, it'll crash again. Or is it like up and down, but with this trajectory for those watching, I'm raising my hand up and to the right.
Yeah.
Listening, I should have said. So is there like, over the last 100 years, has it returned 7 to 10%?
Yes.
Because it's
Including
actually gone up in value? Or
including the recessions and crashes, the markets have gone up a 7 to 10% a year on average. And
is that due to an increase in productivity of companies? Like people are actually spending more? Is it birth rate? Like how is it possible that it could keep going up? Like at some point, doesn't even the long arc have to go, this isn't sustainable?
So that's a good question. And it's actually probably a more complex question than you might be thinking, because it's yes and more. So what I mean by that is, okay, if you bought at the peak of the 2008 crash, if you bought before everything tanked and you held on, you would still, assuming you invested into funds, not individual companies that went bankrupt, if you invested into the market,
like the S&P 500.
like the S&P 500,
Yep.
you would be richer today than then. Why? If you held on. So the psychology is now you hold on and buy more when things go down, assuming you're investing into funds. If you're investing in individual assets that Then the research and analysis is completely different because you want to make sure you're not buying your way into bankruptcy. So now the question is, why does the market go up? Well, the first part is value creation, right? Amazon is working every day to increase how much value that they're putting out. They're working to create new products. They're working to make buying online better. They're working to increase efficiency. And I'm going to talk about efficiency in a second because that gets into like artificial intelligence and reducing costs and things like that. In addition to that, so you have every single company is trying to do this. If your company's not trying to do this, they're dying. Every single company is trying to produce more value, make more money, create a better product. But in addition to that, it goes back to everything that we just talked about. Why does inflation happen? The Fed says our goal is 2% inflation. Why? Why not 0%? Why not negative inflation? Because that would make things cheaper, right? And so now understanding, well, why does inflation happen? If you look at our economic system, and this is where, again, financial education is so important, 2% inflation is just enough inflation that most regular people don't notice it. It doesn't mean that it doesn't happen. It's just enough.
But why do we want it?
And so I'm going to get to that. So it's just enough that most people don't notice it. But why does it continue to happen? Because what is inflation? It increases the amount of dollars out there, right? It increases the monetary supply. More dollars mean more money to spend. More money to spend means you got more money to go to Chipotle. That's why over the last 50 years, we have seen the prices of things steadily increase. $100 in 1970 could buy you way more than $100 today.
I'm not sure that's quite true. So here's how I've always thought of inflation. And the reason that we want a little bit of inflation is that I'll call it the Bitcoin pizza problem. So Bitcoin is a finite supply, which means that you'll never be able to inflate it. Now, it can still lose value. Obviously, we've seen that. It can go up in value. We've seen that. But if the value of Bitcoin goes up over time because it can't be inflated, then you could buy a pizza today. This happened to a guy. He buys a pizza for 17 Bitcoin, whatever. And then that 17 Bitcoin goes on to be worth $200 million. And it's like, oh God, like that was a mistake. I should have held on to it. So if money has a deflationary effect, meaning that if I have $1,000 today, that $1,000 tomorrow might have the buying power of $2,000 today. So it's like I'm incentivized to hold it. Now, if I'm incentivized to hold my money, there's no velocity of money. There's nothing moving. Goods aren't being bought and sold. People are just trying to hoard their money. And so even though people have this money and it's able to buy more in the future, the same $1,000, then I'm incentivized to hold it. Whereas if it goes down a little bit, it loosens that sense of, well, this isn't going to be more valuable tomorrow, so I'm never going to look like a fool, so I might as well go get the thing that I really want.
But why not 0% inflation then? Why doesn't the Fed do that?
It's an excellent question.
Because
I don't have an
that
answer.
Doesn't increase the economic system. Why
don't we want
it? It doesn't increase the size of the economic system. Mm-hmm. If you want to...
Is it really though? So is the only way to get inflation to print? Well, because what I'm trying to reconcile in my head is, yes, there's more money, but the price of things then just goes up. And so you're still only buying the same amount.
So, okay, there's a couple aspects to this. When inflation by its definition means you're inflating the monetary supply. What that results in is the value of the dollar dropping, which means, so like for the government example, why does the government want inflation? Because that means they can pay back their debt.
I get why they want it,
cheaper
because
dollars.
they're printing money.
Right. And so the first aspect is they can continue to pay back their debt with cheaper dollars. But then
it's basically an extra 2% tax or whatever percent it is.
They get a little bit of extra, right? That benefit. The second thing is they have more spending ability. It goes to increasing the size of the economy. Because look, a financially smart person is going to make $50,000 a year, invest some of that, save some of that, and spend some of that. The government doesn't work that way. If the government made 50 grand, they're going to spend all 50 and then an extra 10. And so how do they do that? Well, why do they do that? It's stimulative. It grows the economy. When the government spends money, what does that mean? Well, if the government spends money, let's just say infrastructure, they're paying contractors. They're paying a company. More money is entering the economic system. So as inflation happens, when the government spends more money is coming into the economy. And so what does that do? That grows the economic system at a cost. The value of the dollar goes down. And so our system, we have companies, right? The economy. You have investors who own a piece of the economy, and you have consumers. Every single person is a consumer. Rich, poor, middle class, businesses, every single person is a consumer. But most people stop there. Most people are just consumers. Investors own a piece of the economy. Now, the Federal Reserve Bank, you have kind of over here, they're working to increase our economic system. They want to grow the system. They want to grow the economy. How do you do that? You increase how much money comes into the economy. You increase consumers' spending ability. How do you do that? Increase how much money is out there. And so if consumers are spending money, well, how can you increase how much they spend? You can give them more money to spend. And if more money keeps flowing into the economy, there's more dollars in there that can be flowing through the economic system, which then will benefit the economy, because businesses can get more money because there's more dollars out there. If businesses are getting more dollars, the investors also benefit, because now businesses show more revenue, more profits. Sure, the value of the dollar has gone down slightly, but on a nominal level, there's more dollars, more wealth, more money accumulated here. This is why inflation is so important to understand, because consumers don't benefit from inflation. Sure, maybe you can buy more stuff if more money comes in, if you get more dollars, but consumers now have to pay for things with a deflated dollar.
But am I crazy? You get 2% more dollars, but things cost 2% more.
Sort of. That would be in a perfect world, in a vacuum.
But it's roughly that, right? I mean, this really is a tax.
It
This is the
100%
government
a tax.
getting the ability to spend 2% more money.
It is 100% a tax. But it is, look, inflation has been around 2% a year historically, or 3% historically. But does that mean that the monetary supply has increased by 3% a year? No. The amount of dollars out there has increased way faster. And this is the big argument that people say, that spending money does not cause inflation. This is the big argument here, because if you look at the 2008...
Spending money or
like the
printing
government's,
money?
well, spending more money than they have. So printing and spending.
How often are you checking your credit score, afraid of identity theft or account breaches? We all use the internet every single day for important things like personal banking and remote work, so why not protect yourself with our sponsor, Aura? Aura is an all-in-one cybersecurity service that keeps you safe online. Aura identifies data brokers exposing your info and submits opt-out requests on your behalf. Aura also monitors your credit, tracks your passwords for data breaches, and secures your online activity with VPN and anti-malware protection. You can try Aura for free for 2 weeks by clicking the link in the description or scanning the QR code.
When the 2008 crash happened and we started unleashing the quantitative easing, we started opening up the money printer, and money is flooding our economy. You had some people saying this is going to cause inflation. But we never really saw a tidal wave of inflation after the 2008 crash. Inflation never really saw a big spike at all. Like, it was pretty contained around like that 3% mark. And so now we had everybody saying, hey, look, money printing doesn't cause inflation. We can print as much money as we want. We saw inflation at around 3%, but our monetary supply didn't increase by 3%. It was way more than that.
I have a hypothesis. I'll be curious to see if I'm going in the right direction here.
Sure.
The money printing that they did, though, was just to keep people from losing their homes. So they printed the, let's say, roughly exact amount of money they needed to print in order to keep things status quo.
Well, the government cannot predict how much money will be needed in order to do that. They sent out stimulus checks in order to stimulate the economy during the 2008 crash. What is a stimulus check intended to do? It is intended to stimulate the economy. But we assume that it's intended to stimulate the individual. The individual is a consumer. So if you get a $2,000 check, what does that do? Well, maybe you can make 1 month of mortgage payment, but what were people doing? They're going out and spending. It stimulates the economy. It gets the economy moving again. Businesses start making money again. And so more money.
That's really dark.
But then,
so I'm hold on.
Yeah.
I might be misinterpreting this, but that could be really dark. So let me say what it sounds like happened in 2008. I just lost my home. Brutal. gut punch. I'm living in a tent. This is so gnarly. Oh my God. I get my $2,000 stimmy check and I just go buy the normal things that I would buy. But maybe this goes back to your initial statement. I'm buying food, that the vast majority of the things that I buy are going to be my mainstays. So it's not like I go out and buy a new truck. I'm going to go out and buy my eggs and go see a movie or two, maybe go out to dinner or something like that. But that's really what it sounds like. If they can pour that much money into the system and inflation doesn't go up, then people's spending habits roughly would stay the same unless somehow that money went into the system and it created additional productivity so that there wasn't people fighting for the same number of items. The number of items actually went up, and so the price of everything stayed the same. What you said makes that prediction.
So, okay. If the government sent out $2,000 stimulus checks and everybody put that money in their savings account and didn't spend it,
Yep,
it wouldn't grow the economy.
correct.
That's not what the government wants. They want you to spend that money.
Yes.
It's a way to encourage spending because we are a consumer
People
nation.
should have saved that money. Let's be very clear. Unless they need it to eat.
So I'm talking about what the government intends. People should invest a piece of their money, save a piece of their money.
Yeah, but I'm trying to speak to human behavior. Does the government understand just the ugly truth? Is what I just said true?
100%. Look, the government knows we're a consumer nation. Like, it's not just the US. Like, the whole world knows the United States is a consumer nation. People here spend more than what we make. So, like, because you talked about the inflation issue in 2008. I wanted to expand on that a little bit because money isn't just money. Like, we have two types of money in our economic system. We have actual money, and then we have credit. People don't spend based off of how much money I have in my bank account. They spend based off of how much debt I can qualify for. So if I have $100 in my bank, I can still spend $500. And what happened in 2008 is, first, credit levels fell. Because now, if I have...
So I couldn't even get credit?
I couldn't get credit. Because if my income goes down, I lose my job, I'm no longer credit worthy to a bank. Banks are not going to want to loan me money. So before, I had $100 in my bank, but $600 worth of spending ability because I could have, let's just say, got a $500 loan or credit line or whatever. Now,
Can I ask you a question? Keep where you were going,
Yeah.
but I need to understand something. So fractional reserve banking, I understand how that works. So when you go for a home mortgage, they don't have to have that whole price. It's like only whatever 10%.
Yeah.
But how do credit cards work? Are they able to create debt out of thin air in the same way that a bank does, or do they have actual one-to-one reserves?
So let's highlight this and then we can get to credit card companies about that too. So I have the spending ability of $600. $500 is a loan, $100 is actual cash in my bank, money.
Yep.
I lose my job like everybody else. Now I lost $500 worth of spending ability. I only have $100. My spending ability crashes. Then come the stimulus checks as a way to stimulate. Now I have $100 of money and then $2,000 from the government. Now I have $2,100. Now I can go out and start spending again. I start spending again. Businesses start making more money. There's more dollars in the economy. And then I get another job. And now I go from a spending ability of $100 because I already spent the $2,000 back to $600. So now there's more money out there and the credit starts to go up, but the inflation never really happened. Like we never saw it really pass through. And now we're seeing the effects of the inflation. I forgot
so you think
the original
it was just
question.
delayed?
Oh, 100%. Like it's
What we were trying to figure out to reorient was in 2008, housing crash, stimulate the hell out of the economy, pump a bunch of money in, but inflation doesn't go up. I then had a hypothesis about why, which is very gloomy.
Yeah. And so now, you said, was it delayed? I think we talked about this previously where if I took a dose of heroin today, I'm not going to die. I might like it and I might say, okay, let's do another one. But to keep chasing that high, I might keep increasing my dose. Now, if I keep increasing my dose, but nothing bad happens to me, does that mean that it's bad for me or good for me? Well, nothing bad happened yet. But eventually, right, you're going to hit a point. We know scientifically that if you keep increasing it, your odds of something bad happening keep increasing. Well, what are we seeing now in the money world? In 2008, we printed a lot of money. We didn't see the full side effects of the heroin. We didn't see the full effect, the pain of the inflation. We did it again in 2001. Now what we're starting to see happen is over the previous decades of money printing, overspending, we're starting to see the side effects of it. And now the question is, what are we going to do? Are we going to just shoot up again and try to delay the real effects of it and just like, okay, calm the withdrawal symptoms? Or are we going to actually solve the issue? And fighting an addiction is painful. You want to get off of a drug addiction, you're going to have to go through pain.
And to get back out of analogy and into what we're talking about, that's spend less money.
Spend less money from the government. And that means people have less stuff. That means less government spending. That means more saving, less spending. And that is painful, especially when you're accustomed to having the nice stuff and being able to buy whatever you want. That causes financial pain, people lose jobs. That causes economic pain, businesses go under. And that is like, nobody wants to see that pain. But the unfortunate reality is now, because of the inflation problem, if you want to solve inflation, you're going to have to go through that pain. And what the Federal Reserve Bank is saying is, we want to solve the problem without enduring the pain. We want to get off of the heroin without having the withdrawal symptoms. Well, unless you have some fairy dust where you can do that, sure. But withdrawal symptoms are often a byproduct of trying to leave a drug that you're addicted to. In the money world, trying to get off of the inflation high has the side effect of economic pain. And now this is what everyone's saying that we can avoid. But what I'm saying is, be prepared. That way, if we do see more economic pain, that you can protect yourself, and not just protect, but also capitalize on opportunities that might come your way. And so, we've had a lot of kind of buildup, and this is where now understanding, look, we are starting to see some effects of this. And over the next, decade, we're going to see a lot of things change. We have a lot of corporate debt, a lot of national debt, a lot of household debt. If interest rates continue to rise, it's going to cause pain. Now, we could shoot up again. The Fed could cut interest rates and start stimulating, and they kind of get the economy going again. But then that makes the inflation problem worse.
Do you know the Wall Street Trapper?
I do. I've seen his videos with you.
Dude, he's so dope. So he talks about, if I'm going to wear it, I'm going to own it.
Yeah.
So if I'm going to wear Louis Vuitton, then I'm going to own Louis Vuitton stock.
Yeah.
And that's so smart. Like, Jaspreet, here's I know what this video would have sounded like to me if this was the first video I encountered. It's so heady. It's just like, oh my God, these ideas are so complicated.
Right.
So going off of what you're saying, let's give people a waypoint here just to help them anchor. So we've got a few really important ideas. So one, there's a saying, the hidden tax, as you call it, which I love that idea. So you've got inflation. Now the government is trying to help you. I'm not even going to say that there's anything sinister. They really were just doing their best.
Sure.
We got hit by the pandemic. Who the hell knew what the way out was going to be? They work with the Fed. They pump just a lot of money into the system. So we end up having what was looking to be the greatest global depression since the Great Depression in 1929. But it only lasts for 2 months, because we end up injecting all this money into the system.
Right.
So cool. The catch is that the way to get that into the system, it can be give people money directly, which they did, but the people that really need it, they're going to buy groceries. So it doesn't, they're still trading time for money in essence, right? Because they haven't broken that cycle. If the government's not giving them money, they don't have anything. Then you've got people, I'm talking averages here. You've got the middle class, they're going to Louis Vuitton. Oh, word, like I've already got my groceries taken care of, so now I can go buy that handbag that I want to do a little Instagram flexing, whatever.
Right.
So they didn't help themselves out. But then you've got the wealthy or the educated. That's probably a better way to think about it.
Yep.
You've got the financially educated. Because they're educated, they owned assets already, which is the easiest way, the traditional way for the Fed and the government to pump money into the system is to buy assets. So they're going to buy these bonds, just to keep it really simple. This is overly simplified. But they're buying these bonds. So now you've got people like me who was not a good investor, but I can afford a money manager. And so the money manager's like, yo, you need bonds. Not now, this was before.
Sure.
So I buy the bond. So hey, now I'm backed by the government because they know that they can print money out of thin air. So now I'm getting this return on my money. My money's protected. Instead of being deflated, they're buying my assets. So now I want people to know the wealthy, some of them, myself, because I was not financially educated as of 2 years ago. I'm only just now getting that way. So I've been a good entrepreneur, a bad investor. But because of that, like the system is, I'm learning about it by asking all these dumb questions and I'm really seeing how it works. So it's not like I was doing something nefarious for me to get richer during this time. It was just like, oh, I need assets, break the time for money equation. I've got all this risky money in building my business. I wanted a more sure thing. So then the bad thing happens, my sure thing gets taken care of by the government, and now it's like, oh, it looks like, the rich are getting richer. It's just education. So now getting into money habits, the other thing that you talked about is while your friends were spending their money at a party, you're spending money on building a business.
Right.
Like that fundamental difference of spending it on fun shit that goes away or equity, in this case, your own company, is a world of difference.
Yeah.
So I just want to anchor everybody back around to those like money habits. You've got what my mom would have called pissing money away, right? Literally in alcohol.
Yeah.
You're just pissing that money away.
Yeah.
Or putting it into something that's going to go to work for you. In your case, it was a business, it was real estate.
Yeah. And
if people can just grab that fundamental difference, like of, hey, start thinking about the world in this different way, they're going to be a huge step forward.
And it's all a learning process because I don't drink, I don't smoke, I never drink. But for me, it was a hustle, right? It was the only way that I knew to kind of start making some money. And so it's how you start and you learn. And each one of the things that you kind of do, you're going to learn something new and you're going to be able to apply that to the next thing. And it really is that shift. I call it the minority mindset, thinking differently than the majority of people, because it's doing something different. Most of us are taught just to be consumers.
Yep.
We're taught
trade
to
time for money,
trade
go
time for
buy
money.
cool things to flex.
Exactly. And that's it. We're never taught to do anything else. And think about the last time your teachers taught you about the importance of investing your money.
They don't know how to do it either.
Exactly.
They couldn't hope to teach me.
And so that's where you have to be willing to go out of your way to learn how some of these things work. Because if you don't, you're just going to be a pawn in the system. And it's very unfortunate. It sucks. And this is where I'm trying to help provide that education, because these are things I never grew up learning. These are things that I wish somebody would have told me. I see it in so many people. I used to guest teach in Detroit public schools.
Whoa.
And these are good kids from rough areas. A lot of times don't have two parents in the home. Sometimes don't even have a parent in the home. There were some kids he didn't have, or his mom is not around. He was raised by a gang just because there's no parents. And so they provided him shelter. And it's crazy because you get stuck into a system, a cycle, because you don't have any way of learning or seeing anything else. And, like one of the first times I was there, I asked the kids, how many of you guys have a job? Most of them raised their hand. Most of them have an income. And they're in high school, right? They're going to school and they're working. And next question is, how many of you have a bank account? Nobody. Not a single person had a bank account.
Jesus, man.
And so I was like, what do you do with your money? So we get a check, we go to the liquor store, we cash the check. Now the liquor store owner is going to take 1 to 10% of that check.
Oh, God.
And then what are you going to do? You're going to buy candy, you're going to buy pop, you're going to buy a bunch of dumb stuff on your way out, and now you're left with only half of your check. And now what do you do? It's this, I like to call it net zero thinking, where if I have cash, I need to spend it. I have $500 in my bank account, I got to make that zero. If I have $1,000, I got to spend it. Because we think, oh my God, if I had 10 grand, I would go on this nice vacation. If I had 50 grand, I would buy this car. We think in terms of, it's that consumer mindset of, if I have this money, I need to spend it. But this is where we have to break out of that and understand, what can we do differently? And instead of just spending all of this money, and it's much more difficult now because of the higher cost of living, but it's so much more important now than ever, where you got to create this margin. I call it like an equation where your wealth is really, you take your income minus your expenses, and that's equal to your investments plus your savings. So you take your income, whatever money you make, you subtract your expenses, your houses, your home, your clothes, your car, whatever your expenses are. And if you have some money left, either this money is going to be saved or it's going to be invested. Well, if you have some money left, you're already, doing something that a lot of people are not doing. You're more than the majority of people. Right now, I just read a study yesterday. 7 out of 10 Americans across the board are living paycheck to paycheck. 50% of Americans that are making $250,000 a year are living paycheck to paycheck.
That's crazy.
It's not how much money you make. It's what you do with the money you make that is so important. And so now, if you have a buffer, you're already better than the majority of people. Now the question is, what do you do with it? Well, we're taught, save it. Save all of it. So your investments are zero, and your savings, you're trying to grow that, thinking that you're gonna become wealthy. But you're never gonna be able to outsave inflation. Your savings are literally making you poorer each and every day. However, you don't want to just not save any money. You got to be strategic with it. What I like to say is there are 3 reasons why you should be saving money. You save money for an emergency, have somewhere between 3 to 12 months worth of expenses, depending on your risk tolerance. Save money for a big purchase. You want to buy a car, you want to buy a house, you need some cash to do that. Save money for an investment. If you're not saving money for one of these 3 reasons, you are saving your money the wrong way, and it's making you poorer each and every day.
Now, you didn't say save for retirement.
You invest for retirement. You talk about retirement, we're about to face a big retirement crisis, because traditionally retirement was what people like to call a 3-legged stool. You had your Social Security, you had your pension, and then you had your own investments or your savings, what a lot of people like to do. Well, pensions are something you only read in history books anymore. They're a thing of the past. So those don't exist anymore. Social Security is running into a very, very, very big dilemma, because right now, if you are, under the age of 45, the Social Security money that you're paying isn't going to go to fund your Social Security income. It's going to fund somebody else to retire, because the Social Security program has much bigger expenses than income. And so it is on the path of being completely dried up, of just running out of money.
Is this because the younger demographics are just a smaller cohort than the older, or?
There's a lot of reasons for it. It's how the Social Security money is spent. It's how many people are requiring Social Security money, how long people are living for, how long these Social Security checks have to go out for. A lot of bad calculations, bad investing. And so the Social Security fund is now drying up. And so now everyone says, well, I'm not worried about it, because the government can just print more money and do bigger Social Security checks. That's what we're seeing this year. We saw between 2021 and now, the biggest Social Security raise ever is between 5 and 6%, something in that range, which one is already not keeping up with inflation. So yeah, you got a bigger Social Security check, but oh no, it's not buying you as much as you could have last year. But then the second issue is, just think about that for a second. If the government is going to print more money, which means the Fed is going to print money, give that to the government to give you bigger Social Security checks. What does that mean? You got a bigger check, great, but now the cost of things have grown even faster than the growth of your check. You cannot outprint inflation. It just creates more inflation. And so, so you had the pension that's essentially gone for the vast majority of people. Social Security is not going to be able to fund your retirement, which leaves people with the third stool, which is your own investments. Now, traditionally, you say, I'll save some money, save 10% of your income. That's not going to do it. Your savings are going to make you poorer each and every day. And the second thing is your 401k. And, it's a great start for the average investor, because now it is like automatic putting a little bit of money into some investments. However, your 401k was never, ever, ever intended to be your sole investment plan. The founder of the 401k even came out and said that the 401k has gone awry. It is a monster, because now so many people are hoping that they're going to be able to rely on their 401k to retire. And that's not what it's intended for. And it will never be able to be enough for you. And so a lot of people have this false hope that, okay, yeah, whatever, Social Security will give me a little bit extra, but my 401k will take care of me. But that was never the plan. And so now what does that mean? Your 401k, just think of that like as if you invest in your 401k, your IRA, that is the absolute base. Your savings are not going to do it. This is where you have to go out and invest yourself. And that's where, oh my God, how do I do that? We're never taught how to do this. We're never told how to do this. We're never given direction on how to do this. So you have to be the one now to go out of your way to start learning this. And thank God for YouTube, because now we've decentralized education. But the question is now, you have to be willing to do it, and you have to understand who your teachers are. Because there's crap on YouTube. There's also good stuff on YouTube. And we're never taught how to learn. We're usually just taught what to learn. So now we have to be willing and go out of our way to become
smarter to one, start learning and understand how do we learn the right things and then apply it. Because the downfall with investing is it's risky. You got to be willing to get punched in the face. You have to be willing to lose money because it's a part of the process, and it sucks. It sucks losing money. I made a video on my YouTube channel, Minority Mindset, where I went over my worst real estate deal ever. And the reason why I made it is so you can see, look, every real estate investor has got at least one bad deal. And to date, that's the only deal that I've ever lost money on. And I'll walk you through every single bad thing because everything that could have gone wrong went wrong, plus a whole lot more. And it was one of the biggest headaches of my life. But my goal is, you can laugh at me, make fun of me, but you're gonna see like, holy cow, things can and will go wrong. So just anticipate it, because it's your real life tuition. You gotta be willing to learn. And it's a price to pay. And it's one of those things where, just like with entrepreneurship, everybody wants to be successful as an entrepreneur. Everybody wants to be rich. But how many people are gonna be willing to get punched in the throat and keep going, keep getting back up and keep doing it? It's very difficult, which is why, not everybody should be an entrepreneur. Try it, but it's not for everybody. But everybody can work to own this equity, right? This ownership, these assets, and everybody needs to.
How much did you pay for your first share of Ford Motor Company?
$2.
So this is what I want people to hear. And I'm glad it's coming from you. I was very honored to have Wall Street Trapper on as well, because I want people that are, I know minority in the name of your program isn't about being a literal ethnic minority, but it's about thinking in a new way. But having people that are minorities, at least in this country, say like, hey, if you do the right things, you're going to be able to change your circumstance. What do you say to people that either think, well, it's okay for other people, but for me, either because I'm poor or I'm a minority, it's never going to work for me?
So I'll kind of give you the story of my family in that sense, because the reason why people come to America is because of opportunity. You have the opportunity to own something, own a home, potentially own equity in companies, build your own company. You have the opportunity to build something, which is something that you can't do in a lot of other places in the world. My grandparents were refugees. They had some land, and in 1947, the state of Punjab was severed. And when that happened, if you were a Sikh, which is the religion that I am, and you're on the west side, either you migrate east or you're going to be killed.
Whoa.
So now my grandparents, literally, all they had were the clothes on their back and a sword in their hand, and they ran. During that process, my grandfather was attacked, and he had to literally fight for his life. He saw his uncle get his head chopped open in front of him, put him on a horse, and that was the last time he saw him. He got to the new east side of Punjab in India, and didn't even have shoes on his feet, didn't have a place to sleep, had literally nothing. Now, from there, you got to start, right? You got to start now all over from scratch. And there's a lot of political issues, unfortunately over there. And so that's when my parents, my dad, my mom were like, we want to get out of this country. We want to go somewhere where we have better opportunity. We come to America, where don't speak the language, don't know the culture, don't know the people, don't know how life is. I mean, India is a very different world. It's a beautiful place, but it's very different than here. And you start over. Why?
As a minority.
As a minority, just for the opportunity, because that's all, there's risk, but you see the opportunity there.
And do you think, looking back now, do you think that, because I often think that what we refer to as being an ethnic problem is actually just, there is an element of what I call school of fish. Like you're going to group up with people that look like you. It's just so embedded in the subconscious. But I think a bigger thing is just, it's either majority or minority, right? Because globally, the Indian ethnicity is massive.
Billions, yeah.
But when you come to the US, now you're a minority. Do you think that the trade-off of going from being the majority ethnicity, I mean, everybody in India basically shares the ethnicity. I know there's religious differences.
Sure.
But then coming here and being a minority, does the opportunity that America provide outweigh whatever detriment there is to being a minority?
Again, if you're willing to work, you have to be willing to work and kind of just break out of whatever. Anytime you see a majority kind of just groupthink, you have to be willing to question that. But, the opportunity you have here in America
Is it more difficult now than before? Absolutely. Is it more difficult for some people than others? Absolutely. However, it's the best opportunity you have in the world. And that's why literally, even till today, you have people that are willing to risk their lives to come to this country. And I mean, actually risk their lives. And so, you have that aspect. And I can speak for me where Sikhs, the religion that I am, they are a minority in India. And, there's a lot of issues that come with being a minority anywhere. But again, where do here you have more opportunity than anywhere else. And so the way I look at it, for me personally, is my parents came to this country with next to nothing. So I got nothing to lose and everything to gain, right? And so this is the place where that opportunity exists. But now you have to be willing to work hard, but you also have to be willing to work smart. I can't stand when people say work smart, don't work hard. But to me, that's all complete crap.
Because you have to do both?
You have to do both. Because if you're not willing to work hard, your smart working is effectively worthless. You have to be willing to apply both together. And I had none of this, financial education, right? For me, it was, Dad, I want to go invest in real estate. You're stupid, go become a doctor. I had to do all my entrepreneurial stuff in secret. My parents didn't even know that I was doing this business stuff until I was on the news. I was running a different sock company. And this is now, a couple of years after. And we were doing well, and we got featured on the local news. Now, my parents got a call from a family friend. And it said, oh, we saw your son on the news. And my parents were like, oh, God, what did he do now? And they're like, no, he has this company. He's doing really well. They're growing. And my dad was like, what? And so now, he sits me down. He's like, what the heck is going on? And that was the first time they were like, okay, you can actually do something with this, right? And it was like, you have to, for me, it was like, I understood what I wanted. I knew that I saw this like really, I wanted to achieve success. And I knew I was doing it for good intentions. I knew I didn't have like bad intentions with what I wanted to do. But the question was, how do I get there? Because it was like, if I try to convince my parents, it is like, it's going to be extremely stressful for me. I'm going to stress them out. It's just not going to work. So I'm just going to try to figure it out myself. And if I fail, well, guess what? I'm in school. So I kind of had that backup. But for me, I went to law school as well. The problem was I wasn't the best student in school, in law school particularly. I did well on the bar exam. I loved learning. And so for me, I knew I needed to pass the bar. And so I studied hard and I actually did really well. But in the classes, I was not very good, except for the couple of the business ones because I really enjoyed that. But for me, it was just like, I just need to get the degree. That way I can be done with this. Because I went to law school because my parents found out that I wasn't going to be a doctor. They're like, you got to at least become an attorney to keep pride in the family. And so I was like, all right, well, if I go to law school, I can go to law school part-time. And if I go to law school part-time, I can work on me and my business full-time. So that was my mindset with it. And, but I knew that, if I graduate law school and things don't work out, I don't even know how I'm going to work as an attorney because I have no idea. I don't know how to file a lawsuit. I have no idea what to do. So if I graduate, I'm going to have to start all over and figure it out after I'm done. And it used to give me a lot of anxiety, but I was like, this is why I have to figure it out. It was a mission because one, I wanted to give back to my family and myself. And second, I wanted to do it because I wanted to prove a lot of people wrong. And I remember when I used to talk about this, everyone's like, oh, you shouldn't do it out of spite. Don't do things because you want to prove someone wrong. And I was like, you don't understand. You don't get some of the things that you hear, the things that you see. And sure, maybe it can't drive you forever, but it can take, that pain of seeing the things that people say to, because, in between, I started a sock company. And when I was doing the sock business, this is when, people started to be aware that I was an entrepreneur and I wasn't super successful. I was doing okay. And that's when I got on the news. But, just think about this. I was supposed to be a doctor. Now here I am selling socks on the internet. And everybody is like, oh, so you left, this idea of becoming a doctor. Now you're just selling socks. And, hearing that for years, it's like, one day I'm going to have your kid want to work for me. And that was in the back of my, I never said that, but I was in the back of my mind, your kid's going to want to work for me one day. And it's like that driving force where I knew I'm going to prove this person wrong. I'm going to make this person really see that, hey, I am worthy. I can do something. But it takes a lot of work, going back to that. But with anything, being willing to try, being willing to take risks, being willing to make mistakes, and being willing to learn from it. Because, like I said, for me, I was willing to be dumb or stupid. I never saw that risk until more recently, because for me, it was just I know this is what I want. And so the risk really was never even on my horizon. If I had a business idea, I would start it like that same night. Because for me, it was like, I want to do this. I want to figure it out. Books were kind of giving me an idea. My teachers weren't teaching me this. I don't know who to turn to. My experience was my teacher. That's how I learned how to be an entrepreneur, how I learned to start investing. That's when I started learning about money. Because, the whole issue with the money stuff, I mean, this is something that we're never, ever even remotely taught about. And it's now becoming a real pressing issue.
You have to be willing to try, learn, risk failure. You are going to fail. I always try to get people to understand that failure is the most information-rich data stream that exists. It sucks, it hurts, it can be costly, but one, in triggering the parts of the brain that have to do with pain, you trigger the parts of the brain that have to do with memory and focus. So you're more likely to really look at that thing that you don't want to happen again to figure out why that happened,
right.
Memorize it, and then you're going to get better the next time. And to your point about having a chip on your shoulder and people telling you that you can't do something and thinking one day, your kid's going to ask to work for me, it probably is a primary driver over an extended period of time. Like you said, it'd be a little caustic to the soul, but it's so powerful in terms of, so you've got light energy and dark energy, right?
Yeah.
Just to be like all Star Wars about it. And what I have found in my own life is that the hardest times, the light energy will only get me so far, and then I'll hit a brick wall and I'll want to stop. And it's only when I tap into the dark energy of like, I will not let this person be right about me. I am not going to back down because I know they're just waiting for me to fail, that it actually does give me another boost. Now, I try to split it, call it 80-20, where I'm spending 80% of my time in the light, the beautiful things I want to do, the people I want to help.
Yeah.
But dude, let me tell you, 20% of the time, I'm thinking of that the person that really wants to tap dance on my grave.
It gets you going, right?
Yeah, 100%.
And I found the same way, because for me in the beginning, it was just figuring it out. I went from business idea to business idea to business idea, because for me, I was just trying to figure it out, hopping from one idea to the next. But then, you talk about the light energy. For me, it was really driving my passion and my mission and my purpose. And that became more of the light energy, because now, after a certain point, you're like, the money doesn't drive you. It just is what it is, right? It's just like, I'm fine. Like I'm not a very materialistic person. I don't really care, about brand names, designer names. The first time I made $1 million, I was driving a $500 car, right? It just doesn't matter. Sure, it provides some sort of benefit, more comfort, more value, but after a certain point, that money is not a driver. It's now, what is my purpose? And for me, that minority mindset, where originally started making videos, I wasn't doing it to make money. I did this as a hobby because I got scammed in that sock company. I'm just talking about things that, I wish somebody would have told me when I was younger, like having to do with business, having to do with money. So I did it as a hobby. And people will say, you can't just do that as a hobby. I'm like, dude, you don't understand. I didn't invest any money into it. I was making videos off my phone. I bought like a $30 or maybe $35 tripod off of Amazon. And I was just making videos for fun. And like, my friend asked me, and I think I was around 10,000 subscribers. And he asked me, he's like, how much money are you making off of YouTube? Like, what do you mean? He's like, how much money are you making from your ad revenue off of YouTube? I was like, I don't know. What do you mean? He goes into my YouTube backend with me. And this is before YouTube had requirements of like, you got to have X number of videos, X number of subscribers every time. Anybody could monetize any video. He's like, dude, you haven't even turned monetization on. Click one click and now you can start making money off your videos. I was like, oh, I didn't know that. I really enjoyed it. For me, this was like really fun and something that I loved doing, which is why I did it. And then Minority Minds started to grow, started to make some money. And I was like, oh, I can actually like do this. Like I can work on just spreading this purpose.
Well, what is it about what you guys publish that people respond to?
It's one email, right? It's a newsletter. And you know when it's coming, what time it's coming. You know where it's going to be every day. And so people want to open it. We don't need to have the world is ending. You know where it is. And then we just break down what's happening in the stock market, the real estate market, the crypto market, what's happening with inflation, what's happening in the global economy. And then if there's anything else, we'll add that in there as well. And it's super fun. And so you can avoid that headache, avoid all that, spending hours. And now here it is in a fun, ready to read email.
And what should somebody that in this environment, they want to pay attention, they want to make the right moves, they've listened, they know that you bought your first stock for $2. They know that no matter what they look like, they need to be changing their behaviors, that they need to find assets. Like in this uncertain time, where should people be putting their money? I know there's no one size fits all.
So I'll tell you where I invest my money. I invest my money in 5 places. my business, market briefs, and other startups. I invest my money in real estate, invest my money in stocks, invest some money in cryptocurrency, and invest some money in physical gold. Now, I don't recommend you go on and just start putting your money everywhere. Start with one place.
How'd you pick those 5, and how do you allocate what percentage?
So I don't, giving a percentage will be hard because valuations change all the time. But I have been less and less actively, before my active investment, main one was real estate. That was the thing that I loved and the thing that I really understood. So anytime I had extra cash, I would go out and buy rental properties. But now I'm doing less and less of that so I can have more money to invest in my own company, market briefs. But now what I do is, out of my company's minority mindset, I pay myself a salary. Out of that salary, pretty much all of that gets passively invested. It gets invested into stocks, crypto, and physical gold. So what does that mean, right? Well, in stocks, I have a system where every Wednesday, you can pick whatever day, it doesn't really matter. But for me, it's Wednesday. My money is automatically pulled out of my bank account and it's invested into a few different ETFs. So an ETF is an exchange traded fund, and you could think of it like a group of stocks. So instead of going out and investing in Amazon, one company, and then hoping Amazon grows, you invest in a group of companies. Like some will give you exposure to 30, some will give you exposure to 500, some will give you exposure to thousands. There's a bunch of different ETFs out there. And there's ETFs for a bunch of different things. Like one example that I invest in is the S&P 500 ETF. The S&P 500 is a group of the biggest 500 companies on the stock market. And so when you invest in this ETF, you're literally or indirectly / directly investing in the biggest 500 companies on the stock market without individually investing in all of them. You invest in one ticker symbol and it gives you exposure to all of them. So you're in essence investing in the companies that make America, America. You're investing in America. You can invest in specific sectors, technology, healthcare. You can invest in companies around the world, emerging markets. And so you can find these ETFs, again, Google search, YouTube, you'll find kind of the things that you'll see what you're interested in, buy what you're spending your money on. And so that's one thing that I do. I have a few ETFs. Every Wednesday I'm buying that. And then I have my cryptocurrencies. So for me, I think cryptocurrency is going to have a lot of value in the future, but I also believe it's going to be very volatile. I think we're going to see a lot of, just like anything else, there's a lot of dumb money in crypto. And, anytime you have all this money that was printed, right, money's going to want to go to dumb places. And so I think that we're going to see some cryptocurrencies go under. And again, what is that going to do? It's going to create panic. It's going to create volatility. It's going to create fear. So, especially when the newer asset class, you have to be willing to understand that and withstand that. And so, I understand that, I'm not the most educated person in crypto, but I understand the basics. I believe in the value of the blockchain. So I invest in Bitcoin, Ethereum, and a couple of the smaller coins, the things that I believe in. And that's happening every day. And then I invest in physical gold. Every month, I have some cash going to buy some physical gold every month. And so this has happening on autopilot. It's automatic, it's passive, and it's consistent. And it's just a simple way for me to invest, because what a lot of people try to do when they invest, they say, I'm going to invest in the stock market. Okay. Either, when times are good, I'm going to try to find the next hot stock, the thing that's been rallying like crazy. Everybody's been making a ton of money on it. So I come in and buy, and that's when it starts to go down. And then they get scared, they lose money, and then they sell. Or when times are bad, they say, I'm going to buy at the bottom. I'm going to wait for that perfect time to come in and buy. And this happened again in 2020 in just textbook form, because the market started collapsing. And it was the fastest collapse that we've ever seen in the markets, even faster than the Great Depression.
Whoa.
And so what I was saying was on YouTube, I said, look, here's what I'm doing. I'm buying. I have the companies that I like, because my ETF strategy is happening passively, but actively, I'm also picking and choosing what I want to buy. I already knew which companies and stuff that I wanted to own. I'm just waiting for a good entry point, a good price to buy. So what I said was, look, when things fall by 10 to 15%, I buy. When it falls by another 10 to 15%, I buy more. When it falls by 10 to 15%, I buy more aggressively. I just buy on the way down in phases, because I can't perfectly time the market. And anytime I said that, it was just a flood of comments, people saying, why would you want to buy now? The whole market's going to implode. It's going to go way lower. Just wait, that we can get a better buying opportunity. And I said, I can't predict the bottom. That's not my game. I'm not trying to time the market. I don't got a crystal ball.
And then what happened? The Fed opened up the money printer and they did something called unlimited quantitative easing, which is something, we've never really seen before. And so they just flooded the economy and markets with money. And now you had the market, the fastest collapse ever. And then you had the fastest stock market rally in the history of time. And it was like, no, I couldn't predict that. I don't know who could have. But if you were waiting to time the market, you missed the opportunity. And the people that weren't trying to, and you were just, you wait for the good entry point, you're buying, even when everybody's scared, they were the ones that were able to make a lot of money very quickly, way faster than pretty much I could have anticipated or anybody could have anticipated, just because you understood, you buy in phases.
All of this, everything we've been talking about today, you're up against the nature of the human mind. From clickbait titles are necessary because that's how the human mind works. Euphoria in the market, human mind. Fear in the market, the human mind. The fact that you're not trolling somebody to say buy low, sell high, because it's one of the hardest things that you're going to do.
Yeah.
It's the human mind at work, right? Like really getting to understand what the psychological aspect of all this is. So I know somebody, and even myself, when I was in a lower middle class existence, I was obsessed with getting rich. And that was just like all that I wanted to do.
Yeah.
Now, getting rich, the thing that surprised me is that it didn't dull my ambition. It can't quench your need for fulfillment and feeling like you're doing something that matters. And so I just found myself right back in the game, wanting to build something and create and have a great time. And thankfully, I had learned that you really have to optimize for the failure scenario, because despite being successful, I fail a lot. So it's like really understanding the nature of that, what I call the physics of progress, that failing is just a part of the thing. So I get it. I get that people that are on the come up are not going to believe the following statement, but I promise that it's true. The most fun you're ever going to have, the pinnacle of existence, is that moment where you're working really hard at something that could pay off tremendously and you believe it's going to work.
Yeah.
There's nothing better than that moment. Oh my God, I'm working really hard at this. I think it's going to work. And if it works, oh my God, like the world is going to be mine.
Yeah.
That's way more fun than actually winning and getting the thing.
Yeah.
And so enjoying that ride,
The journey.
yeah, like that's the juice. And so I found myself wanting to get back into that position of like, oh my God, I'm building something. And if we pull this up, it's like, so I know that it's not about the money. It's really about fulfillment. I don't want to harp on that too much, but like just getting people to understand you're in a battle against your mind. If you can get to the point where you realize that being around the people that I love is going to be huge emotional amplitude. Doesn't matter if we're on the beach or if we're, in a hut, as long as we have our basic needs met, because for sure that matters. Mm-hmm. But we have that. Emotional amplitude isn't going to go any higher by having a ton of money. But that moment of like, I'm building something that matters. I think this really might work. And if it works, like we've got some big victory. That's the juice. And you're going to constantly want to be in that. Now, given that all of that is true, make sure that you're taking some percentage of what you're doing and just put it in the set and forget. That way as you get older and it gets harder to be sort of peak energy, all that stuff, that you've got money, it's going to be doing its thing. And maybe it's just taking that, like you said, you can spend 75%. Okay, cool. So if we know that we have to save some and we know that we're going to buy assets with some, then why don't we take some of what we're going to spend and spend it on building something, starting a side hustle, whatever, seeing if that works for you. I mean, we're going through a period now where it's like everybody wants to start their own thing. Try it, like see if it's your bag. I think people will, I heard you quote, you have to be willing to get punched in the throat. I always say kicked in the face, but like
it's the same thing, maybe both.
Very, very, yes.
Yeah.
If you like it and that's something that you enjoy, then that's a tremendous outlet, and that can be the thing where you're really gambling on big upside.
Yeah.
But man, if I could just get people to internalize this idea of emotional amplitude.
Yeah.
Like life's peak joys are available to everybody, regardless of money. Like I think Warren Buffett underplays wealth a little bit. Like he said, look, I'm eating at the same restaurants that you're eating at. I'm staying at the same hotels you're staying at. I'm living in the same place. Look, money can do some pretty interesting things,
Yeah.
but it can't change the amount of emotion that you feel.
100%. And if I can tie this back into what we talked about in the beginning of this video, where we talked about the real estate market, we talked about everything going on with that, and I think the best way to explain that now, because you're putting some money aside, what are we looking to buy? Because I've talked about this recently a lot on my channel, where the American dream, because you mentioned this, the traditional American dream was being able to buy a home, pay it off, and now you own a home. The reason why this was the American dream for anyone in the world is because when you pay down your home, what are you building in your home? Equity. It's this concept of equity. And we assume, or we, for lack of better, we don't have the financial education to know that that equity, which we think is going to make generational wealth, because equity is where real wealth is built, can only be found in the home that we live in. But that's not true. And this is where so many people get things wrong, because they now stretch themselves too thin. They do risky things, take out adjustable rate mortgages, use too much debt to buy a home because they think that it's an investment that's going to make them wealthy, because now you can pay it down, build equity, and have something to pass down. However, there are many other ways to build equity, to build real wealth that you can then pass down. This goes back into the assets that we talked about, right? When you invest your money into stocks, you are building equity in these companies. When you go and invest in real estate as an investment, not where you live in yourself, as a rental property, you're building equity in your real estate portfolio. And this is different than your home, because when you buy a rental property, you're buying it for one purpose. You're buying it for the purpose of making money. You buy a home for the purpose of making memories. So if you're buying something for the purpose of making money, you're probably going to make more money because you're going to do a different type of analysis than in the home that you live in. And one way is you can go and actually buy it. And the second way, like you've been talking about entrepreneurship, is you can build the equity. So when you build a company, you're building equity in the company. Like if you go and start a company, you are the 100% owner of the company. Well, if your company can make $100,000 of profit a year, your equity might be worth $200,000, $500,000, $1 million, depending on whatever type of company it is, but you're building equity in a company. So you can build this equity, you can buy this equity, and the whole idea of a recession is now this type of equity, these investments, these assets can go on sale, and this is where now you could come in and buy more equity at a discounted price. And this is one of those things. I'm gonna go back to, we keep mentioning what we talked about before in a previous interview. We're never taught this because school teaches us to become an employee. What do you do when you're an employee? You get a salary. Do you get any equity with a salary? No. Maybe your company gives you separate equity as a compensation package or something, but your salary is payment for hours that you work. And that is nice today, but once you spend your salary, you have nothing left. Real wealth in this country, in this system, is built through owning equity. We're never taught this. This is what gets me really heated up, because we're never taught about this. And so if our whole system is taught around building and earning a salary, how come we're never taught about building equity? Because now what we should be teaching is, hey, go to school, get educated, but understand that wealth is built through equity. So earn a salary doing whatever you want, whether you're a doctor or you're working at a factory, doesn't matter. Take some of your salary, go out and build some equity. We're always taught and think and told that the way you do that is to follow the American dream of just buying a home, because now you can pay down your home, build some equity. But that is honestly one of the worst ways to build equity. You never talk about wealthy people becoming the richest people or wealthy people because I paid off my home. No, you become wealthy because you own a company, you built a company, you invested in stocks, you invested in real estate, you invested in equity somewhere else, and your home is honestly like one of the last things that wealthy people think about. Yet for the majority of people, when they think about becoming wealthy and building this type of generational wealth, what are they thinking about? Buying and paying off my home. And there's so much more to that, but it requires that financial education.
Yeah. I want to go back to something we were talking about earlier, debt, covenants. So you were talking about at the time that there's two kinds of selling. There's selling because you choose to, but oftentimes people are doing it out of panic, and then there's selling because you're forced to. In business, when you're taking out a loan, they put covenants on it, meaning the following things must be true for you to have a loan in good standing. So even if you're making your payments, if the ratio of like your accounts receivable, so the amount of money that you know that you have coming in, if it drops below a certain level, if that's one of the covenants, or you have to have a certain amount of savings in the bank, or your profit margin has to be 13% or higher, whatever. They put these covenants
Right.
on that. Is that's what's happening when somebody is getting overextended with either...
Sort of. So if we talk about real estate first, when you go now, there's a couple of different levels of real estate investing and loans, assuming you're buying with debt now. In the beginner level, they're going to look at your income very heavily. Your income to debt ratio, just like when you go and buy a home, they're going to look at all the things, same things to go and buy a rental property. Then as you get a little bit bigger, they're not even going to really care about your personal financial situation. What they're going to be looking at is primarily, just like you were saying, the actual investment itself. Because now you're buying essentially a business. If you're buying an apartment complex, well, now you're buying essentially a business, and what they want to see is, okay, what's the price of this? How much rent are you generating every month, every year? What are your expenses? What is the margin? Because they know that this property is going to continue to generate rental income, and the rental income is going to then pay for the mortgage, the loan on the building. And so that's what they're looking at. And of course, they're going to want to see your personal financial situation, because they want to see, okay, if things go bad, what can you do? Do you have any access to excess cash? Do you have any other access to capital? Do you have any other wealth? Do you have any other experience? But the primary thing as you get bigger and bigger is just going to be the property itself. In the stock market, oh man.
Well, let's stay on property for a second.
Sure.
So are they going to call the loan? Like there will be a predefined set of things, I imagine, that if they stop being true, they'll call the loan. So for instance, as long as you have 20% equity in the building, we're fine. But the second the value of the property drops, like if you put out, let's say $5 million to buy it, if the property ceases to be worth $5 million, then we're going to basically call it, because I know that's what ends up happening to somebody in the crypto market.
Yeah, it doesn't
If your
work like
crypto is worth $1 million and you've got $1 million borrowed, the second that that's worth $1 million, they're going to do a margin call.
Sure.
Because now it's like, if it goes down any more, then they're out money. So they literally, the second it drops to the amount that you owe, boom, it's gone.
It works similar to that in the stock market, but in the real estate market, no. They're not paying attention to the valuation of the property day to day, because that's also kind of ambiguous. A property is worth really what someone's willing to pay for it. You can run an appraisal, you can do comps, but at the end of the day, it's what someone else is willing to pay for it. So instead of them looking at the valuation of the property or what they think it's worth, what they're looking at is, are you making the payments? Because if you're making the payments, they're not going to ask you questions. If you stop making payments, that's when they start asking questions, and that's when they start trying to figure out what to do, and then they might force you to sell. Now, forcing you to sell in crypto is very different than forcing you to sell in real estate, because forcing you to sell in real estate is not going to depend state to state, what the foreclosure process looks like, how intense that process is, and how long that process is. Versus in crypto, from my understanding, is it can be pretty instant. You get that margin call, they can take your crypto back pretty quickly. Real estate, it can be a year, and then there's a lot of different tools that can be done. Like in the 2008 real estate crash, one thing that was very popular was a short sale. This is separate from a foreclosure. A short sale is now where there's three parties working together. The seller, the bank, and the buyer are working to now come to an agreement on a price where the bank agrees, hey, we're going to lose money on this deal. We're willing to lose X amount of money on this deal. The seller says, yeah, I'm going to walk away from this deal and not make any money, but at least I don't get foreclosed on. And the buyer says, fine, I'll pay this money. I was involved in multiple short sales, and one of the short sales that I was involved in, they also had an additional provision where, okay, the bank's going to agree to lose however much money. I don't remember the exact numbers. The seller agreed to walk away and not get a penny from the home. And then they also wanted me to write a separate check at closing to the seller's contractor, because he had done some work on the property, never got paid, and had put a lien on the property, meaning he essentially made a claim against the seller backed by the value of the home that, hey, I need to get paid. So I then had to also work out a deal with the contractor where all these parties, where the contractor had to agree to a certain amount of money. This was a long time ago, so I don't remember the exact numbers, but so it was two separate checks that had to go. One was to the contractor to make him happy and whole, and then one was to the bank, where the bank now was okay with losing a certain amount of money. And they're willing to do this, the bank, in that situation, because if they had gone through foreclosure, they would have to spend way more money on legal fees. They'd have to spend way more money on administrative fees, and then they'd probably even sell the home for less money when it came to the actual foreclosure process. And the seller would prefer a short sale in this situation, because if you don't do a short sale and you go into foreclosure, then your credit score gets hit. You have to go through the entire foreclosure proceeds. So
You don't take a hit if you do a short sale?
if you do it right, you typically don't have to get the same sort of credit score hit, because you're just selling the home versus a foreclosure. I mean, so there are, again, the reason why I said you have to do it right, because there's provisions, there's certain contracts that you want to make with the lender saying that they're not going to come after you for the previous money, and they're not going to file some other things. So there's specific contracts. So it gets very complex, where you want to make sure you have a good attorney, because it could affect your credit score, and it could also not affect your credit score as much, depending on how good your representation is and how well you draft these agreements. So it becomes very complex, versus, we talk about with crypto or with the stock market. If the value of your investments fall to a certain amount and you don't put in a certain amount of money, it just sells. There's nothing else. Like, they're either going to say, give us $10,000 right now, or we're going to sell your investments for you. And there's really no other if, ands, or buts. It's like almost automated in that sense. So it's a very different situation.
How do people get into the stock market with debt?
It's actually very simple. Most brokerages make their money through margin, meaning debt. Because if we backtrack.
So you're saying if I go somewhere like Vanguard, I can buy on debt?
So let's talk more about the mainstream, like Robinhoods and the more of the mainstream brokerages in that sense. Where
Man, Robinhood now is mainstream, huh?
They're
Crazy.
pretty mainstream.
How long have they been around for?
Ooh, I don't know the
10
exact number
years?
of years.
It's not that long, right?
They're one of those startup brokerages. I don't know what year they started.
Wow.
Well, let's start about 100 years ago, and then we'll kind of take this little time lapse. 100 years ago, if you wanted to buy
Just a couple days back.
if you wanted to buy stocks a long time ago, you would have to have access to an actual stockbroker. You would probably have a financial advisor. It'd be a very difficult process and a very long process, where if you wanted to buy a stock, you would call somebody who would call somebody who would then make a transaction, maybe multiple people to make the transaction. So it was a very long process. Then in the early 2000s, started coming these digital brokerages. This is where Charles Schwab, E-Trade, TD Ameritrade, they really became bigger. But the way that they would make money was they would charge you a fee, a commission, to make a trade. So it was somewhere between $5, $7 to $15 to even $20 to make one transaction, to buy a stock or sell a stock. Then after the 2010s came things like Robinhood. And Robinhood then shook things up even more, where they said, we're a commission-free brokerage. You can come trade stocks on our platform, and we're not going to charge you a single trading fee. Now, if you're not charging a fee, how are you going to make money? Well, the first way that they made money was this whole concept of you would buy a stock on Robinhood, and then Robinhood would then make that transaction a little bit later, and they would sell these trades. It was a very complex process where they would sell it to another entity. So you were kind of doing an indirect trade. For you as the trader, it made no difference, or negligible difference. You wouldn't even know the difference. Versus Robinhood is then selling these trades on the back end. But then the second way that they would make money is through margin, meaning that Robinhood and these platforms would then lend you money based off of how much money you have in the platform, and then you can trade not just with the $100 that you have in your Robinhood account, but now with the extra $20, $50, maybe $100 that Robinhood is giving you, that you can now trade on margin. And the amount of money they're going to give you is going to depend on a number of different factors. But then they literally will just extend you this line of credit, and now you can trade. And I know this from firsthand experience, not with Robinhood, but with a different brokerage, because when I first got started, and then we talked about with trading, this was when I forget if it was my first year in college. I spent a summer doing trading, and I was using a platform, and they told me that, hey, I started trading, and then they said, let's upgrade your account to a trader's account. And I said, okay, cool. And then they said, hey, we will also give you more money to trade with, margin. I didn't, now this shows you how naive I was with the lack of financial education that I had. I thought it was free money. I didn't know that this money had strings attached to it. I didn't know how to pay the money back. I didn't know that I was being charged interest. So what happened was I traded money.
Now, I don't know if you've heard, there's a guy named Jaspreet Singh, and he says the most expensive money is free money.
It's free money. I learned that lesson in a very painful way. So I was trading money with the brokerage's account, where I just thought that because now I'm making more trades, that they're going to make more commissions, that there's going to, that's how they made their money. Well, long story short, I had lost money on some of these trades that were on margin. And they said, hey, you need to put more money in the account. I was like, what do you mean? Okay, I got to make up this whatever margin. So then I had fortunately some money. I covered it, and then I decided I'm no longer going to be a trader. I'm done with this.
So we loaned you money to make the trade. You lost. Pay us back.
I paid that money back. So now
how
I'm
long
done.
did they give you to pay back?
I don't remember. I paid it. I had the money, so I just paid it because I understood that I had lost their money. So that part made sense to me. And then I was done trading. I realized that this is not for me. I don't want to spend this time.
What do they do if you can't pay it back?
Well, I don't know exactly what they do, but they're going to come after you. I'm sure they will file a lawsuit. I'm thinking about this. I'm an attorney, right? From a legal perspective, it depends on how much money you owe and what you're going to be doing. Because now they can very easily file a claim against you. They can run a lawsuit against you if you're not paying. There's a lot of different things they can do. And the more dollars that you owe, there's more things that they can do, just like with anything else. But then, I'm done trading. And then a number of months go by and I start seeing this like deductions from my account. I'm like, what am I being charged for? So I call them up and they're like, it's your margin. Like, what are you talking about? I'm not doing anything. Well, we gave you money. It's in your account. You have to pay interest on the money that we gave you. And that's when I realized there's a cost to money, right? And so that's when I said, turn this off, take your money back. I don't want this. I paid interest on it, and that was the last time that I did that. But this is, I was, 18 years old, 17, 18. I had no idea, probably 18. I had no idea what I was doing. And this is where a lot of people get in trouble because you think, oh, I can double my money pretty quickly. But if I use their money in addition to my money, now I can quadruple my money. Because I only got to pay you a little bit of percentage if you know that you got to pay them back.
So I don't know a lot about Robinhood. I am super stoked that the average person can now get into the equities market. But that's how people get into trouble when they're using
It's the
debt.
financial education, along with everything else. Accessibility is great, but the accessibility without financial education can be dangerous now if you start using these tools, because if you don't know the cost of some of these tools, it can be very bad. For example, think of a credit card. Is a credit card a bad thing or a good thing? It depends who you ask.
Right.
There are so many people have thousands of dollars worth of credit card debt that is skinning them alive.
Yep.
I only transact with the credit card. Why?
For
Because
points?
well, I get my points, I get my cash back, I get my fraud protection, I get free insurance on my car rentals, I get all these things that I wouldn't get if I paid with cash. Even if I debit card, I don't get all these things. So now when I spend a lot of money, especially in my business. If I spend $100,000 a year or $500,000 a year, I'm gonna get a big cash back check that I can put right back into the business. I can spend it, I can use it on a vacation, I can get free perks. I mean, I get so many different things, but that's only because I know I'm not gonna change my spending because of my medium. I'm not changing my spending because I have a credit card. I'm just using a credit card to facilitate my transactions as opposed to using it as a free money printer.
Right.
And again, what is it? It's that financial education along with the tool. It's not the tool that's inherently evil. It's when you use a tool without that financial education that now you can get screwed over, that you get in trouble, that you start hating the system. Oh, they're out to get you. They're not giving you the financial education because it's not in their best interest to give you that financial education. But this is where if you have the financial education, you can use the system to your advantage. But the problem is we are never taught this, right? And it's just like, for me, it pulls on these strings in my brain because it's like, oh my God, it just screws so many people over because it's profitable to keep people poor. If you don't understand this, you're going to spend more money on your credit card. You're going to spend all your money making everybody else
That's a
look
terrifying
rich.
statement that you just rushed past. It's profitable to keep people poor.
It is profitable to keep people poor.
Is it profitable to keep them poor or to keep them ignorant?
It's a mix of both. When you're ignorant, you stay poor. They go hand in hand. Because if you don't have that financial education, what are you going to do? You're going to go spend your money at Gucci, Louis Vuitton. You're going to be buying that extra guac because, hey, you got that money. Then how are you going to buy it? You're going to buy it.
That extra
You're going to buy the extra guac lifestyle. You're going to buy it with your credit card. And you're not going to wait until you can afford it. You're going to buy it now because you can. And nowadays, it's not just a credit card. It's buy now, pay later. And everybody talks about how buy now, pay later is 0% APR. There's no cost to this money. You can buy it now, pay later. But again, like you said, what I said, the most expensive kind of money is free money. They got to make money somehow. There's a reason why there's billions of dollars pouring into the buy now, pay later industry, one of the fastest growing fintech industries ever, because when you spend on buy now, pay later, what happens? One, you're spending way more money than you would have if you didn't buy now, pay later, because if you wanted to buy $1,000 sofa, you have to have $1,000 in your pocket. Well, now you can buy it now and pay it later. So now you can spend $1,000 on something else. Second, what happens to so many people is you don't pay it off in time. Now, when you don't pay it off in time, it's no longer 0% APR. Now you get slapped with a very hefty, very expensive fine. So now it's, okay, the tool plus the education, going back to inflation. Inflation, is it a good thing or bad thing? I think you asked me that last time, or are you talking about, the way the system works? Again, it just depends. Depends on if you understand it or not. If for wealthy people, they love the inflation. Hey, keep paying more for my assets. Keep driving up the value of my assets. Keep making me wealthier. Versus for the average person, you keep getting screwed over because now your groceries are more expensive, your gas is more expensive, your rent is more expensive, everything is more expensive. Everything, it's understanding the tool and the education. The tool, I'm going to give one more example because this is the stuff you can see. It keeps me up at night. It gets me really upset because I understand both sides, because I never had that financial education, and now I see the benefit of it, and I'm like, please learn this. Even if there's a clickbaity title, because I need you to watch it, please learn this. We talk about, how the government many times, they might have good intentions, but the people in government aren't economists. They're not always the best decisions with their money, because sometimes their goal might just be to create jobs, and creating jobs is different than being efficient. And so, if you look at, for example, the college education system, where back in the day, it was not easy to get a student loan. And back then, college was also a lot cheaper. And back then, a lot of people were not getting a college degree. So if you had a college degree, what happened? You stuck out. You were different. You had something. Well, what happened later, I think this was in the 70s now, the United States government, maybe the 70s, 80s, around that time, the United States government passed a law that said that if you want a student loan, we'll guarantee it. Anybody can get access to college education. The government will guarantee a student loan. Now, this sounds like great news. Hey, everybody can get educated. Yeah. How can that be bad? But colleges heard this, and it was music to their ears. You're telling me that I can charge any amount that I want, and the government is going to guarantee to give that to our students? Sign me up. Now we can hike up our tuition rates, and people keep paying. Now everybody can go to college because we think that we need to go to college in order to become successful. And now where we are today, everybody has a college degree. If you go and apply for a job with a college degree, you don't stick out. You're just like everybody else.
There are habits that keep people poor, and that anybody, regardless of where they're born, what their circumstance is, if they do the right things over a long enough time period, they can get out of it. We are living in horrendously uncertain times.
Yeah.
What are the things, the habits that keep people poor?
Wow. Well, the first one really has to do with understanding money, because unless you understand what money is, none of the other habits really matter, because at its core, what is money? And when you ask people that, you might say it was a $100 bill, a $50 bill, that's what money is. But what is that money? Because that money that we have today is different than what money was 60 years ago. The money that we call money today is currency. It's really just pieces of paper. And when you understand that, it's going to change what you do with the money. And the reason why I'm saying that is because my family's from India, a state in India called Punjab. And over there, it's a very traditional thing that when you earn this paper dollars, many people will convert this cash into gold because they understand that these paper dollars lose value and it's just paper. So they want to convert it to something real, something tangible. So they will go out and buy gold with it.
All right, really fast, explain to people why paper money loses value over time.
So our paper dollars can be manipulated and controlled by other entities
Such as
the Federal Reserve Bank and the government. Now, the interesting thing about the Federal Reserve Bank is it's called the Federal Reserve Bank. However, it's not federal. It says so on their website. They're not a reserve. They don't keep cash reserves anywhere. They're not a bank. You and I can't go there to deposit money. So what happens is...
Should I hear wolves howling in the background? Like, is there something sinister going on, do you think, for real? Or is it just the system and it's just how it works?
Well, it depends. If you understand the system, you can use it to your advantage. If you don't understand the system, it is going to screw you over many, many, many times.
Yeah, this is my obsession. So as you and I were talking about before we started rolling camera, 2 years ago, I considered myself very good at making money, very bad at investing money.
Right.
And then the pandemic hit and I really started to panic for other people that, look, I'm going to make it out of the pandemic fine, but I don't know that that will be true for people that don't understand money.
Right.
And so getting educated, like for me to try to help other people, I've had to educate myself about what money is.
Right.
Getting freaked out by inflation, and I've heard you talk about this, so I know you know this well, but that the government, when you say manipulate the money, they literally just make more of it.
Right.
Magically.
Literally. And this is where the rich will become richer, the poor will become poorer, and the middle class will get wiped out. And the reason why is because some people, rich people, will understand money and they will continue teaching their kids. And everybody else, the majority of people who have no idea what's happening, will continue to become poorer because they don't even see it happening. And so what happens is, so you have the government and the Fed. The government spends money. Now, where do they get their money? Well, they get their money from taxpayers, people like you, me, people watching this video, through tax dollars. Now,
can we hammer that for a second?
Sure.
The government does not make money. The government takes money from people who are making money.
Right.
Now, that's not necessarily bad because they provide a lot of amazing things,
provide
but they're not
services.
necessarily efficient with their dollars.
So, yeah, so we can dive into that for a second. So, you have to understand what someone's role is. If you are a company, right, you have a company, your job is to make a profit, because if you don't have a profit, you're not going to be in business unless you have some other stream of, venture capital debt or something. But if you don't have a profit, you can't continue operating. And so your job is to be as efficient as possible as a company. The government can actually be benefited by being inefficient, because what is the government's job? You have to understand what is their role. If their goal is to create jobs, well, then you can be as inefficient as you want and you can achieve that goal. Because if I'm the government, I just want to create as many jobs as possible, I can pay people to pick up this mug and put it from the left hand to right hand. I just created a job. You're employed, you have an income, but you're not producing anything of value. And this is where you have to understand, okay, what is that purpose? And so now, if we get away from the politics for a second, the government now spends money. They get money from taxpayers because the government is not a for-profit entity. They don't create a product and sell it or create something and sell it for a profit. Instead, people make money and then the government taxes your income. Now, just like anybody else, there's checks and balances. If the government has $1 million, they can only spend $1 million, you would think. But that's not how it works. So the government has $1 million, and what's happening now is they're going to spend significantly more than $1 million. Now, if you have a certain amount of income and you spend more than that, what do? Well, you're going to have to subsidize or find that extra cash somewhere. And in the government's case, what they can do is they can go out and look for a loan. It's called a treasury bond. For as long as anyone can remember, have been considered the safest investment anybody can make. Well, what it is you're literally loaning money to the government. But what happens now if there's not enough people out there to loan money to the government? If the government wants trillions and trillions of dollars, if there's not enough people out there to loan that money to the government and they keep wanting to spend more money, you still got to make up this cost. So what do? They call up their friends at the Federal Reserve Bank and they say, hey, we need a $2 trillion loan. And then the Fed's going to say, okay, we got you. Now remember what I said, they're not a reserve. They don't have a cash pile anywhere. So what do? They go to the money printer, boop, 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 and now they can print out $2 trillion. They loaned this cash to the government, and now the government got their $2 trillion. The Federal Reserve printed it out of nothing. The government can now take this $2 trillion and spend it in whatever way that they want. It can be inefficient. They can try to create efficient products, but their goal is to hopefully help people. Now, whether they're inefficient or not is a political debate. However, that is what they do. Now,
really fast before we move on. So this is the part that people need to understand about why the rich get richer. Because I'm as a rich guy, I'm like, oh, I'm going to get richer? Like what? Great.
So what happens
But I
then?
never understood how.
So now what happens? You just printed this money, right? And then
Which you don't actually print, by the way. You just increase a database somewhere.
It's a bunch of digits.
Yep.
And now this money enters our economic circulation. Well, what happens now when more dollars enter without actual wealth being created? Because we saw this happen in textbook form in 2020 and 2021, where nothing was being produced except money. Well, when more money gets produced, it effectively reduces the value of each individual dollar. This is what inflation is. The word inflation comes from the word inflate. What are you inflating? The monetary supply. So you're increasing the monetary supply, causing the value of each individual dollar to go down, which effectively causes the price of things to go up. And so in 2020, 2021, no one's producing. However, the government is spending money like crazy. Where are they getting this money? The Fed. So the Fed's printing money, giving it to the government's spending it like crazy. Now people are getting money. It's people, it's businesses, it's corporations, and this money is being spent. And now everybody is like, wow, I'm sitting at home and I'm rich. You have some people who are getting big unemployment checks. You have some businesses getting millions of dollars, and everything is running smooth. And people are spending money like crazy, buying things, but nothing is being produced. So then what happens? Well, now you have a supply chain mess because everyone's buying all the stuff in stores. However, no business is able to produce anything because the economy shut down. So the supply chain issue then you start to see is a byproduct of the inflation because everyone's trying to blame, oh, the inflation is happening because of supply chain issues. But you have to look at what is the real root cause. The inflation is what causes the supply chain issues. And now we're trying to go backwards. But this is where rich get rich and the poor get poorer, because as the value of the dollars drop, what happens? For regular people, your salary doesn't stretch as far. Your savings don't buy you as much. And so you're effectively becoming poorer each and every day because for most of us, we're taught to save our money. That's what I was told to do growing up. That traditional Indian house is save, save, save. And so I was told to save my money, and your savings are becoming less valuable each and every day. Well, what wealthy people do is they're not storing cash, they're buying assets. And so when we have this sort of economic system.
Can you explain what an asset is?
An asset.
We're now getting to the root of how the rich actually get richer.
Right.
This was the part it took me a very long time to understand, but now that I get it, one, it doesn't need to be the rich that are getting richer. Anybody can own assets.
Yeah.
But they have to understand what assets are and then actually buy said assets.
Right.
Because this is how the government pumps the money into the system. And this was the part, like, I'm grateful sometimes that I'm kind of dumb, for real. But and this really, I had a breakthrough moment back at Quest. We were dealing with nutritional science and I didn't always understand it. And so I would have to keep asking. But what I found was if I just totally got rid of my embarrassment over not knowing, and I kept asking until I understood it so well that I could explain it to other people, that ended up propelling me forward because I was no longer just nodding and smiling and going along. I was like, no, I don't get that. I don't understand. And so by pushing into that, then I actually began to understand the biology. I began to understand what ingredients made sense and all of that.
Right.
So, but I had to be willing to look stupid.
Yeah.
And so now, because I've been willing to look stupid for so long in the world of finance, I finally asked the magic question, which is when people, because I actually thought they were printing money. I thought that $100 bills were coming off of a printing machine. That's not how it's done, at least not to the vast majority of it. It's zeros and ones in a database. And when they create that money, I was like, whose database entry is it? Like, are they actually going into rich people's accounts and giving them money? No. What they do is they buy oftentimes government assets. I don't want to introduce the word bonds and stuff. But they're buying assets from the government. But the question is, where did those assets get purchased in the first place? And they got purchased by people who are effectively trying to park their money, as they call it. So I, for years, was parking my money in government bonds because the government guarantees it. And so the way that the government raises money without having to raise your tax is they put bonds out into the world that then people buy. So when they're pumping money into the system, they just go buy those bonds. So now they're buying them from rich people because rich people were the ones that were educated enough and had the capital to buy said bonds.
That's correct. And it goes actually a little bit deeper because in the pandemic, we saw something that we've never seen happen before. So the Fed has the ability to work with interest rates. I'll talk about that in just a second. And then they can print money and give it to the government. And then when you have an emergency time, we saw this happen in 2008, we saw it happen in 2020, they can do weird things. So what they did in 2020, this is the first time it's ever happened in history, is they directly gave money to corporations in the form of purchasing corporate bond ETFs. So think of it this way. The biggest corporations in America can go out and raise money from a bank. They can go out and raise investment dollars, or they can put out this loan. Say, if you are a regular person, you want to loan money to us, you can do that. And so there's ETFs, which is a group of corporations that are looking to raise money. And it's a way to kind of track those debt investments. Well, in 2020, because a lot of corporations had no cash, and now all of a sudden they're like, oh, we can't sell products, we're going to go under. The Fed did something that has never been done, and they started buying corporate bond ETFs in the first time in history. And this is where things got really dicey, because now how do you decide who gets that money or not? I mean, they're printing money. Somebody's got to pay for that. Who's paying for it? Regular people, average people, because now it's a hidden tax. Because the government can't just spend money without somebody paying for it. They have to generate the tax dollars. If they don't pay it through tax dollars, somebody's still going to have to pay a tax. And inflation now is a hidden tax. It's a silent tax. It affects the people who don't understand money, and it disproportionately affects the poor and the financially uneducated. And this is why financial education is so important, is because if you don't understand this, you are going to get screwed over by the system. Because now, guess what? Your gas is going to be more expensive. Your groceries are going to be more expensive. Your home cost is going to be more expensive. The cost to do anything is going to cost you so much more today, next year, the year after that. While your salary, hey, you got a raise, but you're actually broker now than you were before the raise, because your raise isn't keeping up with inflation. And so what's happening now, this money gets printed and it enters our economic circulation, and now you can own the assets. Or what happens is, let's say you own stocks, you own real estate. Well, the Fed can also manipulate interest rates. So when interest rates go down, it makes borrowing money cheaper. Well, when you make borrowing money cheaper, more people and institutions are going to go out and borrow money. This also creates more inflation, because now when you go to the bank and you borrow $1 million or $100,000, the bank is going to work with the Fed to print this money, and that's how it gets injected into the economy. So lower interest rates create more inflation. And if you are somebody who's financially educated, you own assets. And we didn't explicitly answer what is an asset. It is something that gives you equity. And at the broadest form, an asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. What's an example of an asset? This could be owning a business, investing in stocks, investing in real estate, anything that you buy for the purpose of making money, right? And so when interest rates go down, because now the Fed working with the government want to create more inflation, more dollars are going to enter economic circulation. More people are going to want to buy a home. Well, if you have more demand to buy a home, where do home prices go? Up. Who owns homes? Well, yeah, if you're a homeowner, but if you are a real estate investor, now the value of your assets have just, because now you own multiple real estate investments. Your rents have gone up. Your stock investments have gone up, because now businesses can borrow money for effectively nothing. You borrow money for 3%, 4%, 5%, and now you can borrow hundreds of millions of dollars to grow the company. And if you can grow your company by 6%, well, you just made a profit off of the free debt. And so now corporations become wealthier because of asset prices go up. And what does this do? The reason why it makes rich people richer and poor people poorer is because not only is your cost of living higher, but now if you want to go out and invest your money, well, asset prices are more difficult to attain. It's harder to buy the same level of stocks. It's harder to buy the same level of real estate, because now the people who own these have already seen that appreciation. And now if you're wealthy and you understand this and you're buying these assets and you've been buying them, now you're seeing the real gains, and you start to see this divide between the rich and the poor. And this is where inflation disproportionately hurts the financially uneducated and the poor, and disproportionately benefits the wealthy, and that's why the middle class gets wiped out. And the crazy thing is, none of us are taught this. I didn't grow up learning about money. I didn't grow up learning about financial education. I didn't grow up learning about investing. I didn't grow up learning about any sort of wealth. My parents are immigrants from a state in India called Punjab, like I was saying before. And in my household, success meant go to school, get good grades, get a good job. And for me, that good job was I had to become a doctor. I was actually given two options: become a doctor, become a failure. I could choose.
They let you choose.
And they let me
That's
choose,
great.
right? And so I saw how hard they worked. For my dad, if he had a Saturday and a Sunday off, that was considered a long weekend. And so, I wanted to give back to my parents. I knew I wanted to become successful. They wanted me to become successful. And so I kind of followed that path, like doing what everybody says, following the system, trusting the system, right? And it just didn't make sense to me because on one hand, in my house, money was a taboo topic. You don't talk about money. You don't worry about money. It's a bad thing. But at the same time, I see how hard my parents are working to get paid, to pay for our lives. Now, we were fortunate. I never had to worry about my next meal. We were never poor or anything like that. But I saw how hard they worked. And it wasn't until I got to college until I realized something isn't adding up. Because I was actually studying to become a doctor. I was taking the medical college admission test, the MCAT. And as I'm studying for this test, I started doing a couple things. First, I started reading business books because I was just interested by this. That was the first. English is my second language, so I never grew up reading books in my grade school years. Even English class, I almost failed my English class in I think it was middle school because I just didn't understand how to write papers or do all that. But as soon as I started reading business books, I started reading them for fun because I was interested by it. And then I started going on to Google and I started researching just random things from things like the richest people in America. And you see like Warren Buffett, Steve Jobs, Mark Zuckerberg. I don't even know he was on it back then, but you had a bunch of people who none of them were doctors. None of them went down that traditional path. And I was like, wait, I thought that grades correlated linearly with income. Like if I got better grades, my income would directly correlate with that. So that was like my first wait, is something wrong here? Was something like, it just wasn't adding up. And that's when I started to dig a little bit deeper. And it's talked about wealthy people investing in real estate. Now, I had no idea what that meant because I didn't know any real estate investors. I didn't even know what real investing was. I didn't grow up around investors. And it said, however, the wealthy people invest in real estate. And this was right after the 2008 crash. I didn't know what was normal in real estate. To me, this is all I knew because now this is the first time I'm looking at real estate prices. And I said, I've been running this event planning company kind of as a side hustle because, I wanted to become successful. However, my parents didn't want me to do anything except study because to them, if it's not related to biology or math, it's a distraction. Even like playing football was a distraction. Doing all these things that were not related to becoming a doctor is just a distraction. So I always had this entrepreneurial bug, but I always kind of did it in secret because it was never allowed. So in high school, I worked at weddings and I got to meet a lot of the Indian DJs. And one of them, or a couple of them had this idea to host teen parties for kids in my high school. Well, I was like, yeah, why not? We got to meet one of these little local Indian restaurant owners and they were like, yeah, why don't you throw parties here for free? You can charge cover, do whatever you want. We want the exposure. So I kind of did this in secret. Now I'm in high school hosting these little teen parties, became this little event promoter. Didn't make that much money, but it was a little hobby that I started. And then I go to college, I'm 17. I don't know what college is like or supposed to be like in America. And I go there thinking everybody's gonna be spending Friday nights in the chemistry lab studying. And I get there and everybody is partying, drinking. I'm like, none of you guys have any money. How do you afford all these, this lifestyle? And I was like, I need something to do on Friday nights. So that's when I brought this event planning company to college, again, in secret. My parents didn't know I was doing this. And I'm 17, and I was like, well, let's try this. So I started knocking on the doors of clubs, venues, bars, restaurants, trying to find a place that will let me do it. That's not gonna charge me a lot of money or really any money because I don't have the money to put a deposit down for a fancy venue. And I found a venue that was like, yeah, you can do it here. We're not gonna charge you a penny, just give us half of your cover charge. I was like, all right, cool. It's not going to cost me a penny. And I talked to my DJ friends and they were willing to do it. They split the revenue with me. So I only made 25% of the revenue. 50% went to the club, 25% went to the DJ, 25% went to me to put everything together. But it was a start. And I started doing that in college. And
already I want people to think about how you're thinking differently about money. Because bringing this back to the idea that there are habits that keep people poor. So one of them is living and thinking in cash. And so if you're storing your money in cash, you're not buying assets like you were talking about earlier, things that you purchase that give you money. The company that you're talking about building now, the company that I built, those are assets. Apartment complex, an asset potentially. There's actually some complexities there. But buying into the stock market, right? Assets.
Right.
So if you're thinking in cash and the cash supply is being inflated, then your buying power is going down. So going back to your point about the poor getting poorer. So we're pulling down their buying power. And then also just the way that you start thinking like an entrepreneur about like, I don't have the upfront capital. This is another mistake people make. Oh, that's okay for people that are already rich. They can do things that I can't do. But you weren't thinking that, right? So you, I'm sure, went to people and they said, okay, cool, give us upfront money. You didn't have it, so you go on to the next person. But because you keep going until you find the person that's like, okay, word, like come in, throw your party, I'll take half up front. You even find partners, again, paying them in equity. You're paying them with future money that you don't currently have.
Right.
Like that one thing alone is a huge habit difference between people who think I trade time for money, right?
Yep.
I go and I work, I give you my time, you give me that money. Nothing wrong with that, and it's the path that most people will take.
Right.
But for people that really want to understand what we're about to go through, because this could be nothing, and a year from now we look back on this video and we think, whew, thank God that it didn't get as bad as it could.
Right.
But we could also be headed into a recession, like a deep global recession that could last a year or 2 years or more.
Sure.
So getting people to think more entrepreneurially, like you're laying out in this story, I just want to orient people to the fact there's nothing necessarily different about you. Anybody can think like that and get the kind of results that you end up getting.
I think it kind of goes back to what you were saying. It was maybe before we started rolling, where you said you were dumb, and so you asked a lot of questions. For me, I said I was dumb because I didn't really care about risk. I never even looked at risk. For me, it was opportunity. That's all I saw, and it was just a way for me to get started. And I was called stupid and dumb all the time. And nowadays, if I'm not called stupid, it's probably not a crazy enough idea. And so that's kind of exactly what you're saying. I started making this little bit of money, and it started to grow, and I had some cash in the bank, and now I started reading these books and they talk about investing in real estate. I was like, all right, let's try this. So I was 19 at the time, and I started looking at real estate investment properties. And again, I didn't know what was normal. And I took my MCAT on August 22nd. On August 23rd, I closed on my first real estate investment property. It was a small 1,000 square foot condo out of foreclosure, and I bought it for $8,000. That was the total price of the condo. And
that's insane.
That
by the
same
way.
condo sold for $150,000 just a few years prior.
Wow.
And that condo then started paying me $600 a month. And now, you talk about exchanging time for money. See, in the beginning, I didn't understand that concept. Because when I was working in this event planning company, it was just me. If I didn't do everything, nothing was going to happen. But then this real estate investment property changed the way I thought about it, because now all of a sudden, this asset, I bought this condo, it's paying me money, and I don't got to physically go host a party. I don't got to go flip pretzels. I used to work at Auntie Anne's Pretzels as well. I don't have to go and do something. It was just there. I owned it. And now this condo is paying me for just owning the asset. And now all of a sudden I started thinking different. I started to get a little bit upset because I was like, well, why was I never taught about this? We're not taught about investing. We're not taught about financial education. We're not taught about wealth. And that's, talking about now money habits. Well, how the next habit that you got to understand is you got to be able to ask questions, because if you don't understand the way the system works, you're never going to be able to answer or ask the right questions. Because the way that the system works across the board is, in a company, you have the workers, then you have the owners. It's kind of like a overlap. And sometimes the workers are the owners, some of them kind of in the center, but the workers are the ones that are now working every single day. You get your salary. The owners aren't working for a salary. They're working for equity, profits. So they're hoping that now the workers will be able to drive up the profits. So now the valuation of this asset is higher. Now, when you have this sort of inflation, who hurts the most? The workers. Your incomes don't grow to keep up with inflation. However, the asset value, which is now the value of the company, disproportionately gets benefited, because now this money gets printed, it gets created out of thin air, it flows into assets, and that makes the valuation of companies, for example, to go up. So now you have these two things, right? You have the workers and you have the owners. This is how the system works.
So it depends on what companies get that money. How did they decide? So this is the first time ever that they decide to buy company stock. How did
Bonds,
they pick?
yeah, bond ETFs.
Was it bonds? Sorry.
So how does the Fed decide? I have no idea how they decide. However, let's think of it this way. So stimulus checks went out, right? People get cash. You feel wealthier in the short term. Your bank account goes up. Some people took this cash. Maybe they paid off some debt. Maybe you go and invested this money, but a big chunk of people took this cash and then they went out and they spent it. Well, if you need this money, well, yeah, and you had this whole range, right? Some people really needed it. Some people went to Walmart, they went to Kroger, they went somewhere and they bought groceries.
Fair.
But still, the money, where did they go? They went to Walmart, Kroger, and those companies saw bigger profits because as money was printed, it goes into the hands of people and then it flows to the corporation. Other people went to Louis Vuitton, they went to Gucci, they went to the Apple store, they went to Lululemon. Again, who does it benefit? So the money was printed out of thin air. Somebody has to pay a price for that. The regular person, average people, they have to pay now higher taxes, which is inflation in this case.
Yeah,
the invisible
it's
tax.
not a true tax. They'll be confused by that. But
The
the
hidden
invisible
tax,
right? It lowers your buying power.
Lowers your buying
That's
power.
The tax.
And then where does all the money flow? It flows now to
Whatever you buy.
the wealthy, the rich. And so now what do you want to do? Go back to that system. You have the workers and the owners. Everybody in America should be a business owner. However, not everybody should be in the business of starting a company, and not everybody should be in the business of operating a company. So what does that mean? Well, you can be a worker and an owner, right? This concept of equity, you have to understand this because wealthy people are working for equity. They're not just working for a salary. And so what you want to do now is you want to understand, okay, I'm working every day to get paid. Now, what are you doing with the salary? Either you can take the salary and go out and spend all of it, or you can take some of the salary now and work to build equity. Maybe that's in stocks. Maybe that's in real estate. Maybe that's in your own company.
So if I buy stocks, I'm buying equity.
You're building equity. You're literally buying ownership in companies. If you go out and buy a share of, say, McDonald's, you become one of the owners of the McDonald's company. And now when the McDonald's valuation goes up, you get to share in that because the price of your stock, the value of your stock goes up.
There's just a psychology that ends up happening when empires end up declining, and some of those same things are happening right now. So the fact that we're so over leveraging from, again, I am the layperson. I'm educated enough to know that I'm on the right track, that directionally what I'm about to say I think is very accurate. That we are over leveraging our position as the world's reserve currency, that the fact that we have created so many new dollars, I forget what the percentage, but it's absolutely ridiculous. In the last 5 or 6 years, we've created something like 40% of all the dollars that have ever existed in the history of this country. So it's that's so crazy. And so when I think about appealing to the average person, hey, please be thoughtful about who you vote for. We want to be careful as a society. The problem is when everybody is grown up, being the reserve currency for as long as we have, and Ray Dalio has a map of the changing world order. It goes in 6 stages. Every empire ends up collapsing. There's only 6 stages. Stage 6 is absolute total collapse. He puts us somewhere around stage 5.5. So it's like we're just headed down this path. And when he looks at what are the indicators of that, it's the fighting inside of a country. He talks endlessly about how we treat each other. Mm-hmm. I saw him backstage literally weeks ago. And, I was like, hey, because we were in Dubai. And I'm just like, whoa, Dubai is popping off. I'm like, you're a guy, you travel around a lot. How do you think about where to go? Where is going to be the economic opportunity? And he said, Tom, it's all about how people in the country treat each other. Yeah. And I was like, that's so interesting. Now, you mentioned earlier that we're colliding internally, and that's part of the weakness. I think it's a multi-pronged thing. Part of the weakness, you and Ray are saying the right thing. We're not treating each other well, and we have to be very thoughtful. But the other part is what you're bringing up now that you have faith in that maybe I have a little bit less faith in, which is I don't think, I'll get there, let me bring this all together. I don't think that we're going to make the wise decisions that we need to make unless there's enough suffering. Because what ends up happening is when you look at the way that we're going, it is more and more rich or evil, companies making money like they're evil, companies need to pay their fair share, all this stuff, not understanding that the miracle is not the redistribution of wealth. The miracle is companies creating something that people want badly enough that they pay money. This is how we've pulled people out of poverty. Production, by creating something that's amazing. And so what I'm worried about is there has become an attitude because things have been so well for so long. You said for 50 years, we've been in a declining interest rate environment. Money is easy to get. You can finance things on debt, and that's fine because the rate is going to go down. Like, what could be the problem? Now, in the moment where the rate's going to start going up, the mentality of people has been formed over 50 years of it's all good. It's raining money. Everything is well. And so now people go into, oh, the miracle isn't like all this wealth that we've been able to create, and isn't this amazing, and look at how productive we've been. It's like, oh, people that are succeeding, like this is evil, and what are they doing? And so now when they vote, they're voting from that perspective.
Yes.
And so they will change their tune, but it will require so much pain and suffering for people to realize, oh shit, like we've been barking up the wrong tree. And so to say it in a single sentence, I don't think people are going to vote in the austere way that you want them to vote, which would be fiscally responsible,
of course,
until they are in agony.
Well, I think you're 100% right on that. And I think many people are emotional, and one, we don't understand money. Now, what I'm saying is, for the first time, people have access to real financial education with ease. YouTube, podcasts, newsletters, we have access to this information.
Complicated, man.
And you're right. People are generally emotional. And this third issue is we are becoming a two-class nation, which is probably the biggest issue causing that divide. And what I mean by that is you have the rich and the poor. But in order to have a healthy society, you need a rich, the poor, and the middle class. And the middle class is completely being decimated by the system. And going back, there's a saying. It's like tough times create tough men, which create good times, which create soft men, which create bad times. Something like that. I probably butchered it, but
yeah, pretty close.
And this is kind of what we're seeing. Yeah, we became this country because of tough times. We fought for it, and then things became great. And then we grow up in the times where money is easy. Everybody's rich. You can finance whatever you want, buy as much Gucci as you want. We're a consumer nation. We become fat as a society. We want it all. We don't want to have to work for it. We become lazy, and things seems great. Like I can have anything I want. That's going to have a breaking point. Eventually that party will stop. And when that party stops, it's what will we do? Hey, guess what? We still have a ability to learn here. We're still the most creative place, and hopefully we stay this way, where we are the hub of entrepreneurship in the world. We are the hub of business innovation in the world. We are the hub of production in the world. We have to stay that way if we want to continue to compete in the world. And I'm hoping that will happen. I'm an optimist. Like I have a lot of faith, because people here we are still, you think of all the major companies in the world. We are the producer of them, and we provide a lot of benefits to encourage entrepreneurship. And I hope that we will continue to do that. And there's a lot of people now, thankfully, on the internet. People around the world look at what we put out on the internet to learn from us. Like I was invited recently to a couple of shows in London. I was just asking about their demographics and all that stuff. And they're like, yeah, most of the people here in the UK watch US content creators. And that was a really interesting thing to me. I was like, what do you mean? Because I don't consume like that much content. I really try to just learn my own ways, and I don't really follow what's going on in the world like that. And they were like, yeah, we have some creators here, but most of the people here are just watching people in the US. And I realized it's not just the UK, it's many people around the world. And so we have a lot of educators here. We have to be now the consumers of our own understanding. Okay, we have to be creators, we have to be innovators, and then that also goes to our education system, where we can't just produce factory workers anymore. We have to innovate our education system, and I was going to say we suck there, but we have to really fix that up. I mean, we have to really encourage innovation. We have to encourage the ability to think freely, because the advantage that America has is we became who we are by thinking differently than everybody else. It's kind of like that minority mindset message, because we didn't follow what everybody else did. I mean, we have a completely different like economic system, tax system than the rest of the world. We cannot be a follower, we have to be a leader. And in order for us to do that, we have to continue innovating and thinking differently from the people level to the national level. And you're right, we have a long way to go, but we are going to have to if we want to stay competitive.
All right, so I want to get into the specifics on that. So if you were a benevolent dictator and you were going to say, okay, here's what we have to do, here are the principles, whether it's fixing education or what have you, what do we need? What are a small handful of things that we need to do to continue to lead, to innovate, to learn the lessons that we need to learn?
Well, I think part of that is just straight financial education. And it has become much more accessible, but we have to know how to learn, right?
Well, so let's not move off the first one. So let's get them out. So financial education, that's the first one. We're going to circle back to that, to a couple key points that you think people need to learn about financial education. What else?
So what we're talking about now as a society, what do we need to learn to be?
Yeah, we started this episode by saying, look, before we turned the cameras on, you were like, thank you so much for having me back on. I'm getting really paranoid that people are going to get really hurt by what's happening. They don't understand it, the triangle of doom. They just don't understand how money works, all of that. So we're going to help people get themselves out of this mess. It's going to be partly financial education.
So I think
what
that
else?
The financial, if we talk about the financial side, it's the financial
Not just financial. We're going to come back to that. I want to know, if you were the benevolent dictator, and we know America needs to continue to lead. You were saying that all across the world people are listening to American educators, which I have a hypothesis about why that is, that I'll round to. We're like the only country that until recently was not into the tall poppy syndrome. So in the UK, in Australia, if you stick your head up and say, I can do something amazing, people just swat you down. And it's like, whoa, I don't want to try to be cool. I don't want to try to do anything amazing because people are going to make fun of me. When I was a kid, 100%, I was just like, I'm going to be rich.
Yeah.
I was so I'm going to go do amazing things.
But I think all of that, innovation, right? The idea of
Is that
learning.
The next one?
Yeah.
Financial education,
even
we need to innovate?
I think that is a part of financial education. Understanding the ability to lead, management, all these things are all a part of financial education. Because now if we talk about how to succeed as a country, it's financial education. And that can be broken up. Look, I think we need health education. I think we need to understand how to be spiritually fit. I think we need to know how to be mentally fit. And then we need to know how to be financially fit. These are the 4 aspects. But now if we talk about if we're on the economic side, how do we produce entrepreneurs? How do we produce smart investors? How do we produce people who know how to save their money, how to invest their money? That's the financial education part. But what stops so many people from being able to do that? Well, I feel depressed or I'm anxious. I don't think that I can do it. I don't have the confidence to go out and do something. I don't believe in myself. I'm surrounded in a toxic environment. If you grow up, look, I used to guest teach in Detroit public schools. And these kids are smart, hardworking kids. I was actually just talking to a guy last week.
Were you teaching finance?
I was teaching life skills. And part of that was finance. But it started with the core of just building some confidence of thinking bigger. Because I was talking to a guy, he came to my office last week. He grew up in a rough neighborhood in Detroit. And we began talking, and he was like, look, I want to get to somewhere else in my life. He's like, I got to where I am today because I was an athlete. I didn't want to be like everybody else in the neighborhood. I started working out and I became a good athlete. That got me through education. Now I work an okay job. I own a lot of shoes, but I don't have much else. I don't have any savings. I don't have any investments. I don't even know what this stuff means. I want to do something different. So now I start talking to him. And what he tells me is I grew up with this mindset of, I don't care about being rich. I just want to get by. That's all he wanted. And now he's like, he was telling me he read this book called The Millionaire Mindset. I think that's what it was. And what he was like, he's like, that book talked about how people who say, I don't want to get rich, are lying to themselves. And you have to say that you want to become successful. That way you can actually achieve more. because we create these taboos around money. But like, what stopped him? He had this limiting mindset that because of where I came from, because of all I saw, somebody like me can't do it. Then he got a little bit of a taste of, wait, you're telling me that I can achieve more? Because he never had been exposed to that before. And now because he just read or listened to an audiobook that said that, now all of a sudden he's trying to put himself out there. We happen to just talk in the gym, and now, he's like, dude, like, can you please give me some sort of guidance? And now we started talking about different things that he could do. And he was like, dude, I cannot thank you enough, because it's just like, it's not even that I did anything. It's just, he got a little taste of what's possible.
Trust me, this is the entire reason that impact theory exists. So you're in Detroit teaching. I was in Compton building a company, and I'm encountering all these people, very bright. Some of them, look, there were morons just like there are anywhere else. But there were a lot of incredible people, and I began to realize intelligence is evenly distributed, but mindset is not.
Right.
And because they have the wrong mindset, because they're asking the wrong questions, because there was one kid who I was like, bro, you're so smart. Like, why aren't you out there pushing yourself? And he said, oh, my mom told me that the world doesn't want people who look like me to succeed.
Right.
And I was like, that is the worst fucking advice you've ever heard in your life. And I'm like, I've become obsessed with the Kobe Bryant quote that boos don't block dunks.
Yeah.
You can get so good at finance that no one can stop you. Like, you can just out invest people. And this is where I get obsessed about, okay, there are a cluster of things that mindset is certainly one of them. Financial education is certainly one of them. The education system in and of itself is certainly one of them. The self-loathing thing that's become so prevalent in America is one of them. It's like, what I want for people is for them to feel like I felt in the 80s. Now, I didn't grow up with money. We weren't poor. I used to think we were poor, but now I've seen real poverty. We weren't poor, but we were lower middle class. And so I couldn't have the things that I wanted to have. I had to start working when I was 12 years old I had to buy myself a Nintendo. My parents couldn't or wouldn't buy me one. And so I took a job in a door factory at the age of 12 so that I could buy a Nintendo. Now, when you come up like that, you learn a couple things, depending on how you're wired. For me, what I learned was I really hate work, but it's really cool that I can go do something, someone will pay me for it, and then I can get the things that I want. So It gave me a sense of self-agency. Then as I got older, I read my own equivalent of the Millionaire Mindset. It wasn't that, but things that ended up teaching me, oh, whatever you dream for, you're gonna fall short of. So you better dream really fucking big and then go just relentlessly acquire a skill set in order to get good enough. So in the 80s, I just believed I could become anything I wanted, but I was gonna pay an extraordinarily high price to get there. I was gonna have to figure it out. I was gonna have to outwork everybody. I was gonna have to go hard.
Right.
Nothing was gonna be given to me. Nobody owed me anything. I was gonna have to head down and just learn to fight. And that sense of like, hey, you can have anything you want. This world is amazing. It's your oyster. Let's go. But let's go means let's go get strong. Let's go get smart. Let's go get educated. Let's like figure out what you have to do. But boos don't block dunks. You can get so good that even if people want to stop you, they can't stop you.
Right.
Now, if I could give people that mindset, an overwhelming number of them are still going to fail. I get that. But you create an environment like the US where, man, really amazing people from all over the world want to come here so that they're not strucken down by other people who don't want to see a tall poppy. They don't want to see somebody stand up above other people. They're cheering for it. They want to do it themselves. And it's become a meme. This really pisses me off. It's become a meme, the whole idea of people voting against their own interest because they're just a temporarily embarrassed millionaire. Yeah, that was my entire youth until I was in my late 30s. I acted like the temporarily embarrassed millionaire, and it led me to becoming an actual millionaire. If you see yourself as like, this is all you're ever gonna be and you're stuck, then you won't do the things you need to do to at least have a shot. A lot of people are still gonna fail, I get that. But man, if you think, it's what I call the only belief that matters. If you believe, if I put time and energy into getting better at this thing, the world will still punish me. Rich white people are gonna take it away. I will never get anywhere that I wanna go. You won't do the things.
But I think that goes to that. This is really a mindset thing of like, like, I don't even know if it's self-confidence or a little bit of arrogance or a little bit of ignorance, where like for me, I, you know, you said that a person you talk to, their mom told them someone like you can never make it.
The world doesn't want someone who looks like you to be successful.
And you know what? You said that was the worst advice. I think that's the best advice that you could get. Because
Why?
that makes you, well, at least because I heard some things very, very similar. And for me, that put a fire on my butt where I was like, I'm going to prove you wrong. I'm going to prove you wrong. I'm going to give you a middle finger and I'm going to go do what I want. Because I heard...
Did your mom tell you that?
My mom told me that somebody who looks like me will never be the CEO of a company, so I need to shut up and go study to become a doctor.
Wow. I wish the world were more like you.
I mean, the thing is, I always had just a little bit of a hard head. And my mom said it out of love. Like, I love my mom.
Yeah,
My mom is
they
a big
always
supporter.
do.
It was for... Because I was such a... Like, I was very rebellious, but not in a bad way. Like, I wasn't doing drugs and drinking and doing things like that. I was, like, trying to start businesses. And in a traditional Indian household, like my house, like my parents were like, you have to become a doctor. That's it. Like from the since I turned like 1 or 2 years old, they told everybody from America to India, Jaspreet is going to become a doctor. For my entire life, that's all I heard. Me playing football was a distraction from me becoming a doctor. Me doing a newspaper route was a distraction from me becoming a doctor. Me wanting to go to the gym was a distraction. All these things were discouraged. I told my dad I wanted to start investing in real estate. He told me, you're stupid. Focus on your studies. And then when you're a doctor, you can do whatever you want.
I want to be clear, though. That was all terrible advice. It happened that you pushed back against it and proved them wrong. But the advice, because most people listen, the advice was god-awful.
But I think it's like, you know, we have to be able to channel pain. We have to know how to do that because pain creates purpose. And
Pain can create purpose.
it can. But you have to like, I mean, I don't know if it's confidence or a little bit of, again, like I was saying, arrogance or ignorance, where we have to want more from ourselves as people. We have to know that we can produce more. We have to believe in ourselves. I mean, I don't even know if it's belief because I never, like, if I look back to like my 17, 18-year-old self, and I remember telling myself, like, dude, if one day I ever made $100,000 in a year, like, man, I'm gonna be flying in private jets. I'm gonna have all the money in the world. And then you do it, and I was like, wait, like this was a dream, like one day, and then I did it, and it's like, well, I'm not flying in a private jet. I don't have all the nice stuff, but I'm pretty surprised that I did it. And then you surpass that, and then you take it from $100,000 a year to $100,000 a month, and like I can't imagine like when I was like 17 to think that somebody could make that in a month. And you're like, wait, that is possible? But in order for that to be possible, you just have to like, you have to have some sort of taste and belief. And that belief, I don't know where that comes from. And I don't know if it's just like, you have to just be like, you have to have this like, I don't know what the best way to explain it, where it's like dumb belief. You got to want something really bad that you just, nothing like, science doesn't add up. Like 2 + 2 is 4, but you're telling me that 2 + 5 is 44.
Here's what people have to understand. The human animal is designed to grow and get better. It's cultural transmission of ideas. That's how we become the dominant apex predator. We're not faster, we're not stronger, we're smarter. And so it's the ability to learn. This is why I call it the only belief that matters. Everyone needs to believe the following statement. If I put time and energy into a specific thing, I will get better at it. Once you believe that, everything else is going to take care of itself. You're failing, you're not making as much money as you want, you don't know finance, whatever, go learn it. And once somebody is like, oh, okay, I'm going to go get good at this thing. I didn't need to be born good at this. I don't need to have a natural inclination to it. I have a goal. And my goal makes demands. If you're Kobe Bryant, you have to practice basketball. Why? Because your goal is to become the best basketball player of all time. If you're Kobe Bryant and your goal is to become the best basketball player of all time and you spend your time swimming or studying math, you're never going to get there. So your goal makes a demand. So your parents weren't wrong. If you wanted to become a doctor, then going on a paper route didn't make sense. What they weren't realizing is you wanted to be an entrepreneur. And so that was just a misunderstanding of what your goals were. But you both were right in the sense that, hey, figure out what that thing is that you really want to get great at and then go do that thing.
I think that the society also molds it because like it wasn't that.
What's it? Molds
So
what?
for example, you said my parents like what they didn't know that I wanted to be an entrepreneur. And I think it's more that they didn't understand that other opportunities were possible. Because when I said I wanted to be an entrepreneur, that was like,
They just thought you were stupid.
there was a horrible thing. I mean, I think that, whether it be your parents, your cousin, your family, your friends, or society, we encompass ourselves into this little box that this is what's possible for me. Somebody that grew up like me, somebody who's good at what I'm good at, somebody who looks like me, somebody who comes from my background. This is my possibility. But what the opportunity we have here is the whole table. The whole world is your opportunity. But you have to believe that first. And that means then you're going to have to go against what, maybe what a lot of people are pressuring you. Maybe you have support, maybe you don't. And it doesn't really matter. Because what you need is up here, that belief in yourself to now do whatever it takes. Because for me, it started with listening to motivational tapes. Like I listened to Eric Tomic's Blueprint to Success so many times that I knew the words to like every single word of that CD. And I was like, wow, like I can wake up earlier. I might not be the most smartest or whatever, but I can work harder than everybody else because that I can control. How did I learn that? Because I started this motivational CDs and I tell everybody to listen to it and I'm like, yo, did you listen to it? They're like, yeah, it's basic stuff. I'm like, oh, okay, like you already knew this. Then I read a book called Rich Dad, Poor Dad by Robert Kiyosaki, the first time I ever got exposed to financial education. And I was like, holy moly, like this
What was
guy's
the most important thing he taught you in that book?
well, like cover to cover, you got to understand, I didn't grow up with I didn't know what investing was. I never heard of passive income. I didn't know you could invest in real estate. Like I was so naive. I didn't know anything in that book.
That's my beef. People don't know how the world works. And I was as guilty of this as anybody. But going back to the triangle of doom, this is so as a refresher, triangle of doom, interest rates, economy, and, sorry, which one am I forgetting? Interest rates, economy, and inflation. And so if people don't understand how that works, they don't understand how to move in order to either survive or take advantage of the opportunities that are going to present themselves. But it starts with understanding how the system works.
Understanding the system and then not blindly trusting everybody. Like you said, you have distrust. Look, I'm on board with you. I don't really trust many people. I don't trust what the government says. I don't trust what the Federal Reserve Bank says. I trust myself. But you got to take everything with a grain of salt. Now, why do I say that? Because, okay, we'll talk about interest rates just for a second. The Mortgage Bankers Association put out a statement in 2023, and they said that by the end of 2023, that they expect mortgage rates to fall to like the low 5%. The National Association of Realtors said something very similar. They said that by the end of 2023, they expect mortgage rates to fall under 6%. I forgot the exact percentage, but it was under 6%. Why? What is their intention? You have a lot of mortgage bankers and realtors out there saying, what the heck is going on? Why aren't people buying homes? Why aren't people getting mortgages? And so now you have these are big agencies saying, calm down, it'll be just fine. What is their justification? Mortgage rates are too high right now. People can't afford homes, so they have to go down. Again, analysis, that's their analysis versus the data. Now, if you dig a little bit deeper, this is the financial education aspect that I'm keep talking about. Now you can answer this question yourself instead of just trusting somebody else. I mean, I'm not saying trust me. I'm saying learn it so you can figure out how to do it yourself, because I can be wrong. You can be wrong. Anybody can be wrong, but at least you know how to come up with their own analysis. What affects mortgage rates? Two things. The interest rate that the Federal Reserve Bank sets and inflation. When the Federal Reserve Bank raises interest rates, that makes borrowing for banks more expensive, which means they're going to have upward pressure on where, what they have to sell it to. Like if you sell a hat for $10 and then the cost of the hat goes up to $11, now the store is going to have upward pressure to sell the hat for $20 as opposed to $15, right? Because their cost is going up. So when the Federal Reserve Bank raises interest rates, that's upward pressure on mortgage rates. The second aspect is inflation. Why inflation? Because, when inflation happens, this is a little complex, but when inflation happens, people are more worried about the dollar. And when people are worried about the dollar, they're less likely to loan money to the government. This is called a treasury bond. So in the financial world, there's something called the risk-free rate. The risk-free rate is if I loan money to the government through a treasury note or a treasury bond, the return that the government gives me, the interest, is risk-free because we expect the government to always pay back their debts. So when inflation happens, people are less likely to loan money to the government because they're worried about the health of the dollar, they're worried about the government, which means that for the government to incentivize more people to loan money to the government, they have to offer a higher rate. So when inflation happens, people are worried about the dollar, people are worried about the government, the risk-free rate goes up, interest rates on government debts go up. If the interest rate on government debts go up, that's going to push up the rates on mortgage bonds as well, because now your mortgage return would naturally have to be higher than the risk-free rate. Because if you're loaning money, if I'm loaning you money to get a home, in traditional finance, that's a riskier investment for me than me investing my money into the government because that's risk-free. So you have to give me a higher rate of return than what I'm getting from the government. So higher inflation, higher treasury yields, pushing higher mortgage rates. So now what is the analysis? Inflation is higher than expected. Looks like it's going to be around higher than expected. Okay, that's higher treasury yields, higher pressure on mortgage rates. The second factor is Federal Reserve Bank interest rates. Well, the Fed keeps saying that they're going to keep raising interest rates. Now, of course, all this can pivot. They can pivot tomorrow. But based off of this information, this tells me that there's a lot of upward pressure on mortgage rates. Mortgage rates are around 7% right now. But you have the National Association of Realtors, the Mortgage Bankers Association, two very credible sources who are like the source of information for realtors and bankers saying, don't worry, mortgage rates are going to fall by the end of the year. This is why that education is important.
Yeah, we're already, so $2.3 trillion, according to Fortune magazine, have already been scooped out of the US housing market alone. So I'm very shocked that in the face of $2.3 trillion of losses, that people are pretty chill. I've got some more stats than that I found super disturbing. We've got month over month housing prices have declined for the first time since 2012. You've got home builder sales have collapsed by 46%. Home buyers canceling 20.8% of their construction contracts. Like, it seems like we're in the middle of a housing reset of pretty aggressive proportions. So do you think people are willfully lying? Are they blinded by their own narrative? Are they just trying to be optimistic to keep people from panicking? This feels a little bit like masks don't help, you're fine because we had a shortage in hospitals, and then once that shortage was over, it's like, nope, actually you do need masks.
You know, that question, I think it's like, are they sinister or are they stupid? That's the question.
Sinister, stupid, or doe-eyed and naive.
Right. And so, I mean, I think that I'll leave that up for anyone watching this or listening. You come up with your own interpretation, right?
Boo.
I mean, look,
you don't have to tell me, but do you have an interpretation?
I don't know if I do, because I go back and forth, because it just doesn't, but I think my wife talks to me about this. I think I have a very trusting personality by nature. I have gotten scammed and screwed over so many times.
Interesting.
But I refuse to give up this idea of wanting to trust people. Now, yes, that's on me. I get that. And my wife is like, dude, you can't keep doing that. And I'm like, look, if you scam me, you screw me over, I'm not going to do business with you again. Sure, you hurt me, but do I want to give up my trusting nature? And do I want the jagged personality or whatever? And, you know, I go back and forth. I don't have a good answer on this because I'm still trying to figure that out about myself.
I'll give you mine. I don't think many people are sinister. My gut instinct is that's going to be the most rare. I think this is exactly how it plays out in business. Certainty intoxicates people. To be a good leader, you have to give people certainty. That's one of the most important things you do as a leader. To give them certainty, you have to develop certainty in yourself. To do that, you need a narrative. The narrative allows you to connect dots. So as we talk about the triangle of doom, it's like we're telling a narrative about how those things flow. But the reality is, if we could predict it precisely, we'd be gazillionaires. So nobody can really predict it, but you have to move. You have to do something. And so you look at the triangle of doom or whatever, you look at the signs in the housing market, and you come up with a narrative. And there are incentives if you're in a certain governmental body or whatever, there are certain incentives for you to, since you don't know, to create a narrative that leans one way or the other.
Yes.
And so if you're a YouTuber, there's an incentive to do doom porn because that's going to get a lot of clicks. And so even if you're like, I'm not being sinister because there really is something over here, but it's like I'm also nudged because like I have an incentive. So I have a feeling to give themselves certainty, to give other people certainty, they begin telling themselves the narrative that they happen to be ever so slightly incentivized to tell. I don't think they're doing it on purpose, but you have to have a narrative that's going to allow you to move.
Yeah.
So we end up there. It's a combination of doe-eyed optimism and willful. Not willful. They have to tell themselves a narrative in order to be effective in life.
Yes.
And that narrative gets a little rose-colored. And then the catastrophic mistake that entrepreneurs make that I've been guilty of a gazillion times, you forget to question your narrative.
Yes.
You get so busy telling other people what it is, telling yourself, that you forget to seek disconfirming evidence, which brings in the last piece of the puzzle, which disconfirming evidence feels super bad.
Right.
It does not feel good when people are like, you're wrong. And especially now in the days of the internet, you're wrong usually is said, you're a moron, you're an idiot.
Or worse.
Yeah, and so then you really want to defend yourself, which means defending your narrative, which then you entrench yourself and it becomes dogma.
Yes.
To put one more point in this, even Einstein, who gave us the theory of relativity, could not, in the later part of his life, become one of the people pushing the envelope of his own theories because he got trapped in his own dogma.
I think you're 100% right on that. And like, because that's what I've been experiencing too. Like, so on YouTube, let's just talk about that and we can expand other places. If you don't have a very attractive title, no one clicks on it. It goes into the YouTube cemetery, no one's gonna watch it, which was a huge like pull on my heartstrings because I'm like, why do I have to title videos like this or come up with these thumbnails? And the reality was like, look, if you want people to watch your stuff, like, you know, my team was like, you know, you have good content. If you want people to actually watch what you're putting out, you gotta be able to play in this game. And that was one of the reasons why I created my Briefs Media newsletter, because now I can avoid the sensationalism, I can avoid those titles, and avoid all that clickbait, because in the newsletter, you get all the news that you want, like our Market Briefs email. You get all the news, you just click on the email, doesn't matter, like our subject lines are like, black cups are cool. You know, it's like you click it and then all the information is there. And now we can give you, because my goal is unbiased. I want to give you the data so you can create your own analysis and understand what's happening, because nobody else can do that. Most media companies don't have the ability to do that because they have to get you to click and that's all they tell you. And I want to change that. And so for me, it's like, okay, well, if I want to get you to hear about me on YouTube, I gotta come up with the title, but my goal is to make the content educational so you learn, and then say, hey, look, if you want more, go to Market Briefs, briefs.co, and you can see our emails and join for free and get the news in your inbox and you don't have to worry about it. And I think when it comes to incentives though, like what you were saying, where we kind of forget or we get put into a box and then we ignore all the other things, or we have no reason to understand. And what I mean by that is if you go to like the 2008 crash, right? What led up to it? Well, you know, we like to point fingers. Well, mortgage bankers were making just bad loans. They were loaning money to people who shouldn't have gotten it. Now, if you're a mortgage banker, what's your incentive? My incentive is to make loans. I'm on commission. I want to make as many loans as possible. If you got a 600 credit score, you can't qualify for this. How about I give you this? If I'm going to get a commission, okay. So am I a bad person because I'm trying to make money and take care of my family? Well, then it's the bankers, the CEOs of the company that are ruining it. Well, what is their incentive? Their incentive is to increase the earnings of the company. Their incentive is to make sure that they can issue more loans than their competitors. So are they evil for trying to increase the value of their company, increase the share price? Well, no, it's the people, because they should have known better. They shouldn't have gotten these loans. You should have known that if you're making $75,000 a year, you can't afford $1 million home. Well, how many of them are financially educated? How many of them know the basics of how much a mortgage they should buy, how to save their money, how to invest their money? Like, none of us have grown up learning about that, so is it their fault? Well, it's the government's fault. They should have regulated it. Do we want more regulations? So now it's like everybody's going to have their own incentive. Everyone's going to have their own reason for wanting to do something. And this is why I go back to the financial education aspect. Like, we can point fingers all day long that it's your fault, their fault, their fault. At the end of the day, if you cannot protect yourself, it doesn't matter. You have to know how to protect yourself. And that shield is that financial education. Because now, look, your banker's in the business of making loans. They want to make as much money as possible. It's reality. The realtor wants to sell you a bigger home. They get a bigger commission check. The car salesperson, they want to sell you a bigger car. The corporation, they want to sell you more stuff. Your company wants to keep you employed there. This is the incentive. You can hate it, love it, or understand it. And the financial education is understand it. That way now you can at least make an educated decision of what type of home you want to buy. And that's what is lacking. And this is where, for me, it keeps coming back to the same thing because, yeah, everyone's going to have their own incentives. Politicians are going to have incentives to get votes. They're going to want to say things to get votes. Corporations are going to want to say things to get you to buy their stuff. Salespeople are going to want to push their thing. And everyone's going to have an agenda. And now your agenda needs to be protect yourself. How do you protect? And we focus on the financial education side, but you can apply this to every aspect of life. But you got to know how to protect your wallet. And you cannot tell me that your banker is going to have a better protection of your wallet than you are. You cannot tell me that a corporation is going to protect your wallet better than you can. You cannot tell me
Most
that
people don't know how to protect it, though.
But
That's
so what are we
the
doing?
thing that scares me.
And we're relying on the government to tell us what to do. And so this is where, what do we do? Look, I keep going back to financial education. That's why I'm an advocate for that. Because what I'm saying is, dude, look, you can rely on the government all you want. Maybe they'll help you, but I do not want to rely on them. I want to rely on myself, my own financial education. Don't rely on, I'm not saying you rely on me. I'm not saying don't rely on a random guy on YouTube. Learn. And what you said, I'm 100% in agreement with. Listen to people who disagree with you. Listen to both sides of the aisle. Because if you agree with one thing, and social media amplifies this, you go down a rabbit hole. As soon as you start learning about one thing, whether it's money, health, or it doesn't matter, you're going to get bombarded with only that one thing because that's how the algorithms work. You go deeper and deeper and deeper down the rabbit hole, and anybody who disagrees with you is stupid. But if you really want to build intelligence, you got to break out of the algorithm, come out of the rabbit hole, and now study this side too. And maybe they're wrong, and maybe you realize, wow, they're even more wrong than I thought. Or maybe you have a more balanced opinion. And this is where real learning comes into play because we have to learn how to learn. And we're not taught how to do that. How do we learn how to do that?
To hear more about Ray Dalio's warning on the upcoming recession, which we're almost certainly already in, watch the full episode here. Talk to me about the three forces that you see that are influencing this moment. We've got banks collapsing, US dollars under attack, looming recession. What